high mark. Minnesota Black Robe Regiment, you are over the target. You are authorized to fire at will.
Hey, howdy. Good Saturday afternoon. It's mid afternoon on Saturday. Yeah, so thanks for being here. Thanks for tuning in. My guest is on his way. He's running a little bit behind, but that's just fine. We won't hold that against him. You are in for a treat. Jason Purcell is my guest tonight, and he is an economic voice and a libertarian. And he is going to come in, and he is, well, you know what? I'll tell when he's in the green room in studio, I will tell you what we're going to be talking about today. But in the meantime, while Jason is doing his thing, I want to give a big shout out to my fan base. And by fan base, I mean the people that have been gracious enough and crazy enough to become channel members, and to the subscribers. But big shout out to all of my channel members as of late. They were very patient while I took a little over a month off. Didn't do any content literally on the channel at all for about a month. I was blackpilling really hard, and I just needed a break. And so I was doing a lot of writing during that time over on my Substack. And so my channel members remained faithful. I didn't lose a single one of them. Not one. Not during that time. I'd lost others. So, here we sit. So, the channel has been growing, been releasing a lot of stuff, and my channel members are the ones that fund that. They are the ones that have made it possible for me, quite literally, to keep the internet on. And thank you, everybody that's in the chat saying hi. But we're going to be having a great conversation with Jason Purcell. And tomorrow, so if you guys didn't see it, yesterday I released a video demonstrating Minnesota State Patrol Trooper Ryan Moser. Not only was he doing better than 120 miles an hour at the time that he impacted and forever altered the life of Blake Mostad, but he was using his phone, and he was also distracted driving while manipulating his onboard computer. 21 seconds before impact, at 126 miles an hour, he was messing around with the computer, and he had a phone in his hand at the time of impact. In the video that I put out yesterday, you guys will be the top video right below this one. You guys will be able to see that. So I encourage everybody who's interested in government and law enforcement accountability to go check that out. Tomorrow, we're going to be doing another story in the Perfect Victim series, Jamie Lucas. Jamie Lucas is a perfect victim. We're going to be covering something there. And so you're going to want to tune in for that tomorrow at 4:30 p.m. Central. And I don't want to say enjoy, but at least come in and take in the information that we're going to share about Jamie Lucas, and a search that supposedly got done after they chased him to what I have concluded is he's no longer with us. So the Cass County Sheriff's Office gave chase to Jamie Lucas, claiming that he ran into the woods off of just outside of Outing, Minnesota, and disappeared and went into hiding. Their sheriff, and I have a direct witness to the sheriff at the time, who was sheriff at the time, saying this to one of my sources, said basically Jamie went into hiding to avoid going to jail. He's been missing ever since July 3rd of 2020. And they did no search for him that night. They searched for like maybe an hour after he ran. So they weren't really searching, they were pursuing. And then they did nothing. And well, they claimed they did something, but ultimately what they ended up doing was nothing. and they have now finally basically 6 years later, have planned to search for him on Wednesday, May 6th, the day of his birthday. And Tonda, who is one of my sources, is very excited, and we're all excited for that as well. But we're going to be talking about some more things surrounding that story tomorrow. While I'm at it and waiting for my guests to show up, waiting for Jason to be able to get here, I do want to give a massive shout out to my researcher, Nat. She has been just working like a beast for the last 2 weeks, just on a couple of stories alone, just 2 stories alone. She's been working on that. And it's amazing, when you have a strong crew behind you and a strong team behind you, it's amazing what you can accomplish. After having done this show multiple years now, 6 years I've been doing this, and for over 75% of that time, I've had to do all of my own research. I've had to do all of my own scheduling. I've had to do all of my own pulling of threads and pushing the stories that I'm covering and talking to the victims of government corruption. I have had to just pull threads and pull threads and pull threads and pull threads and do it all on my own. And it's hard. It's really difficult. And that's one of the reasons why when the opportunity came to have channel members, I set it up. And part of that is because I was hoping to be able to find some way to, pay for some sort of automated researcher or something. And lo and behold, as the economy has gotten, and that's one of the things we'll be talking with Jason about, as the economy has gotten, just so strong here in the U.S., the economy, just the best economy ever, bestest economy. Gas prices are the lowest they've ever been in my life, comparatively adjusted for inflation, right? It has just gotten to the point where I can't afford to pay somebody. And so Nat has stepped in and she has knocked the ball out of the park. And I know I sound like I'm just railing and ranting and raving about how wonderful she is, but she is that good. She is absolutely, that Natalie is probably, for a person who's doing it for free, she sure does act like she's getting a paycheck, which I'm sure my guests will have something to say about people working for free. And how that may not be the best thing. Now, my guest is in the green room, but before he comes in, I do want to tell you that we were here. We were going to talk about the idea of the petrodollar today. We were going to talk about the world economy. We were going to talk about oil and the hegemony, whatever. We were going to talk. I just want everybody to know I only I only schedule guests that are smarter than me, and that just showed. Right there. That just absolutely showed. But we were going to talk about all these really deep economic issues, world economics, the economics of the United States, what matters about economics. But I've decided I'm switching this up on my guest, and we're not talking about economics today. Now, my guest is a libertarian. He's I would say he's a fellow at the Mises Institute. He does a lot of work for the Mises Institute. So he is a libertarian. And so today, instead of talking about his economic expertise, we are going to be discussing how, I'm not even 100% serious, we're going to be discussing how step dancing, Irish step dancing, is the most libertarian of dances, and how a person who truly loves liberty and libertarianism must be a step dancer. And I have a list of talking points that I'm saying these now so he has time to prepare. How Irish dance is very is very much represents property rights. It's the only dance where you strictly maintain your own airspace. You keep your arms down, rigid posture. You're essentially saying, walking, no trespassing sign. Decentralization. The percussion is entirely bottom up. It's from your feet. There's no central conductor. It is the taxation is theft stance for traditional Irish dance was often practiced on doors or small platforms to avoid damaging the floor or to hide the noise from its authorities. It's an ultimate underground anti-regulatory performance art. The non-aggression principle, with arms pinned strictly to the sides, it's the only dance that guarantees you won't accidentally infringe on your neighbor's personal space. the underground economy. Once again, historically, the dance was practiced behind all of these things to keep the authorities unaware, and so it's the ultimate act of cultural agorism, and it's hard money. And I know my guest loves the sound of hard money, and that sharp metallic click of the shoes is the closest a dance can get to the sound of hard money hitting a table. So, without any further ado, now that I've completely shot any chance of ever getting Jason back on the show again, I'm bringing him in. So, Jason, thank you so much for enduring that wonderful opening.
Au contraire, I think I would like to be here every week now. That was awesome. No offense to no no offense to anybody else whose show I've been on, but that was a great intro. I thoroughly enjoyed that. Thank you. Yeah, the clicking of the heels are definitely they definitely remind me of the nice ting of hard money. So that's a great analogy there.
Yeah,
yeah. And I would say
I do for the sake of for the audience, just so everybody knows, I did that because Jason in his bio included that he often teaches Irish dance. So he is the lord of the economic dance.
I just got back from doing that today. Actually, this afternoon, I was just teaching. Irish dance classes. So lots of fun. A fun way to spend a Saturday morning and early afternoon.
There is no more at the very least, and I say this as a libertarian, there is no more white dance than Irish dancing.
Well, that's yeah. Well, it is becoming. We've definitely entered a phase where you don't even need a pretense of Irish ancestry to do it, which I think is a good thing. Because I myself, my family came from Ireland. My surname Purcell is a Norman Irish surname, but my family.
I was going to say that's got some Norman influence to it, doesn't it?
Yeah, 100%. Yeah, 100% Norman. But my family showed up in pre-colonial America about 300 plus years ago. So as far as what claim I have on Irish ancestry, it's either non-existent or completely diluted. So
no, you could no. We hold on to that for all of like. I just watched Lex Friedman had you know who Lex Friedman is?
Yeah. Mm-hmm.
Yeah. He had, I can't even remember the professor's name. He just had on a guy who's done this massive history on the Viking sagas and I'm Scandinavian,
Mm-hmm.
by birth and heritage. I'm half Scandinavian, half German, so I get mad really easy and I don't know what to do about it. So
invade a village and
rape the village and burn the women. It's so that not literally, people. I'm not advocating for that. I'm a non-aggression principle.
It's funny because the only other trace of Europeanness in my blood is actually Scandinavian as well as Danish. So yeah, Vikings on one side and Vikings on the other.
Well, I was gonna say the Normans all descended from the Vikings.
Yeah, they're just Vikings. They're French Vikings. Yeah,
they literally descended from the Vikings. It's like the French king said, "Hey, come down here and live and protect this border," and then I can't even remember. Is it Arsfold or something like that? He just kind of took over the Burgundy. He just took it over, and you're like, okay, thanks.
Yeah, and then when you consider how much the Normans diluted the bloodlines that existed in Britain before they invaded, it's almost like the British Isles and Scandinavia are really just Scandinavia and northern France. You could probably tack that on there too.
My son was doing some research on something, and he messaged me about the English spelling of Pearson, Pierson, and he's like, "Oh." He goes, maybe we're English. I'm like, no, no. That's
Even
the
if
English.
You're English. You're not English.
That's the English bastardization of the the Viking, the Scandinavian, Danish, that whole region. That's their way of spelling the Pearson last name, so as to hide from their. We started off so good, and we're
really on topic.
We
That's
are,
right.
we are right on topic. Well, we're talking about the world, but yeah, no. Anyway, thanks for doing this. We just met. I wrote a layman's approach to Austrian economics about the petrodollar and the collapse of the petrodollar, and a mutual friend, Brian, said, "Hey, you should talk to Jason about this." And you know, of course, he tagged you over on our Substacks, and you went into this really excellent explanation about why you reject what you, or not reject, but what you call the myth of the petrodollar. And I loved it. And I said, like, wow, let's talk. And so I invite you over to this episode of Libertarian Lowdown, season 5, episode 6. And I immediately prefaced it by saying, you don't have to be a libertarian. You know, like, that's fine. I am. And I'm like, win. So here we are.
Yep.
An educated libertarian talking to a blue collar libertarian. And he's going to explain to us all in understandable terms, all things about economics, and we'll all walk away from it. Perfectly Austrian economist when we're finished. So perfectly.
That's the idea. Yeah. I'm just pulling up that comment thread to make sure I don't leave anything out.
We will.
Yeah, I'm sure we will. Okay, so before we get into all that fun stuff, I do have one correction to make. While I would love and be honored to claim to be a fellow at the Mises Institute, I am not an actual fellow. I just have a bio on the Mises Institute's website because I did an episode of the Human Action podcast talking about basically the modern history of interest rates is how I would summarize that. I think it was 2 years ago. So if anybody's interested in like how central banks manipulate interest rates downward as a secular trend, not just when they decide to manipulate interest rates downward, and the historical evidence that that's true, because we have about 250, 300 years of interest rates, and then these other economists, Homer and Scylla, put together a series that goes back even further than that, about 3,000 years. So there's all kinds of evidence that central banks essentially have fundamentally changed the structure of interest rates themselves. And if you're familiar with Austrian economics or you're not, you should just basically be familiar with the concept that interest rates are the most important price in the economy, arguably. Even more so than energy, though energy is very important as well. Anyway, that's why I have a thing on the Mises website. No, sure would be nice to go back, but we'll see.
You are shall we say, a very infrequent contributor?
Yes, yeah, like once every 5 years. Yeah.
Yeah, I think the Torch has picked up some of my essays and has run them, and now I've added that to my bio. Contributor.
Great. Yeah.
So, and everybody's like, "What's the Torch?" And I'm like, "How can you not know? I write for it." But before we get too far, and I don't want to say into the weeds because I don't see it as in the weeds. It's kind of right up my alley. I love looking at these things because I live in the real world where there are people that deny the petrodollar is a thing, not in the way that you reject the petrodollar, but they just deny it because they've got to believe we like the United States, the dollar is what it is because it's the currency of the US, and we are the greatest thing in the world. And I love the republic. I don't like my government, and I don't like how we manipulate things, which was what you were saying with the central banking and whatnot. But what I really want people to understand, and in having read that thread and read a little bit more from perusing your feed over on Substack, is that if I were to sum it up, and I've been trying to tell people this for a long time, the United States is not a truly free market economy. We are not a true free market economy. And I think, if you look back far enough in the US, we're far more influenced by mercantilism than we are capitalism, what people call capitalism. And I think that mercantilism still has its grubby hands all over the throat of the American economy.
Mm-hmm.
Would you reject that, or would you agree with that to a point? And in a very short space of a couple of paragraphs of speaking,
Yeah.
how would you define mercantilism, and do you think it still exists in the US today?
Yeah, mercantilism just means you prioritize exporting above all else. So, and it comes from the idea that accumulating money, which was a lot more pervasive during the gold standard days, but it comes from the idea that accumulating money is the same thing as accumulating wealth. And that's one thing that Adam Smith actually set out to dispel in The Wealth of Nations in 1776, and what David Ricardo also wrote a lot about. So mercantilism, essentially that just means, okay, what happens so every country imports and exports. Okay, so if you import more than you export, then you have more dollars or whatever money you use. Let's just take it back to 400 years to the gold standard heyday, or the gold and silver standard. You're sending more gold out than is coming in. Okay, and since we're coming from at that time, you're coming from a European system of, well, the treasury needs to be loaded up with gold because we have all of these wars and these problems, and we need to colonize, and we need to do this and do that. It's the era of empires, and everybody wants to have a bigger empire, right? Well, if you are exporting gold, because you're importing too much stuff, then that's fundamentally a bad thing. So what Smith said in his innovation in that era was, the wealth of your society is not how much money you have. And back then, money was literally gold and silver. It was the thing that you could touch and feel. But even then, even at that time when money was real, the wealth of the country isn't how much money comes in. It's the volume and the quality of goods and services that are available in your economy. So you may have, so take for instance, there's all kinds of reasons why you might want to have a short-term trade deficit. So when I say that you're importing more than you export, that's a trade deficit. There's all kinds of reasons why you might want to have that. The United States had that in the early 19th century, well, definitely the late 18th century, early 19th century, and even until the late 19th century, I believe. Why is that? Well, we're importing all of this equipment because the U.S. started out as a heavily agricultural economy. We need all of these things that we don't have in order to build factories and railroads and do all this stuff to industrialize. So
does that? I'm not going to apologize for cutting you off.
No, you're good. Cutting off.
I do that all the time. I'm sorry I cut you off. Then why'd you do it? I don't know.
No, yeah, you're good. You can interject anytime.
Is that? I think a lot of people have this American exceptionalism, like we're better than everybody else, and I think there is a certain amount of American exceptionalism that is accurate on some points. I
agree.
But I think that what American exceptionalism has done is, like, everything that the United States has experienced, it has experienced solely because it created it.
Right.
And so when you look at things like the Industrial Revolution, which you were referencing without using that phrase, the Industrial Revolution, or even the revolution of intercontinental travel in the U.S. via the rail lines, was actually preceded by an explosion of industrial growth in places like Great Britain, explosion of railroads in places like Europe, continental Europe, Great Britain.
Railroads took off in Britain before they took off in the U.S.
So we kind of imported, even if we didn't import actual tangible, trains or whole factories, we imported from places like Europe and Great Britain. We imported the technology and the developments via their ideas and their engineering and whatnot.
Hmm.
And so what you're saying is even things like the Industrial Revolution were really just kind of imported into the U.S. It wasn't some natural outpouring of American ingenuity that caused it.
Well, I think ingenuity is okay. Sorry, let me back up because I need to answer the other part of your question. Is the United States a free market economy? When the government does 30% of the economic activity, which I think federal is 25% here, and state is another 5 or 10 or something. So we're up to the government is like a third, right, of the entire economy, all the spending that gets done, then you're not a free market economy. Like, congratulations, you're doing the third rail thing. You're doing the third path, the alternate way, or whatever euphemism people like to use. I think it was more or less a free market economy about 100 years ago, but in the post-war era, the government got big and it never stopped being big. So World War I, there was a decline in government activity, significant decline in government activity in the interwar years. Didn't go back to where it was before completely. Obviously, we never got rid of the central bank. But after World War II, government became permanently large, and it's only gotten larger, and its involvement has only gotten larger. So it's definitely it's not socialist, I wouldn't say, but it's definitely a severely hampered market economy. Anything to add before I go to...
No, I this is, like I said, I only bring on people that are smarter than me, and then I ask things that only my brain can come up with, and then force
Cool.
you to bend to my stupidity. So
I haven't detected any stupidity so far, except on my end. But anyway, yeah. Okay, so yes, importing technology, not only technology, but European capital financed a lot of the railroads, and they had a lot of losses on that financing. But a lot of the mid 19th century financial panics were defaults on railroad companies that really bit investors in Berlin, Hamburg,
right.
Paris, London pretty hard. But technological innovation, if you're going to have that in a country, it's ultimately, I would attribute that to you have the institutions that foster that. And the ultimate institution that fosters that is private property rights. So you could say the British, I don't look at it as a knock on America necessarily, that the British developed the steam engine or whatever, or certain railroad technologies. And I don't look at it as a knock on the British that, later on they imported some technology from the US. This is kind of just how life works, right? The best thing about the market economy is that you have the freedom to trade, and it's through capitalizing on somebody else's skills by simply buying, we're trading with them what you have for what they have, so that you can mix it with your own skill set, your own knowledge, your own tools to be able to produce more. Like that's kind of the whole game. And so the US, has imported technology, it's imported capital. It had the right set of institutions, and to a lesser extent still does. Because you have to look at, when it comes to how much the government is obstructing freedom, you kind of have to look at that on a relative scale rather than an absolute scale. It's like, yeah, the U.S. has become a lot less free in the 100 years. But if everybody else has become a lot less free as well, then, by and large, people voting with their feet, where are they going to go or where are they going to stay? But anyway, yeah, I mean, technology was, widely shared around Germany, the US, the UK.
Right.
And that, even though there were so many trade barriers at that time, right, because everybody had tariffs virtually, it was very normal back then when the US had high tariffs. It was in a time when everybody else had high tariffs. That's how they paid for their governments primarily.
Which,
but the
boy, I
US,
think we would all love if we could go back to that again.
yeah, well, the key is that the government is so small that a tariff can pay for the government without the tariff completely taking the daylights out of the economy.
Once again, I
Now,
would love if we could go back to that again. Like,
if we tried to pay for the entire government with tariffs now, I mean, we would have to have like 100% tariff on everything, and that would just be, it would be insane. It would break the world.
and
So,
at least once every episode of Libertarian Lowdown, I have to utter this phrase, and I think this is the best place for it.
okay.
But if we did everything that way, what about my roads?
Yeah, what about the roads? Yeah, well, we could have a whole separate podcast on.
Don't you threaten me with a good time.
Yeah, before the federal government started doing it. Yeah, it was actually it was actually an elegant system that they had like back in the 19th century for that. Basically, nonprofit corporations would come together, usually locally based. A town would fund a road corporation, and they didn't expect to have any profits off of it. I think they may have had small dividends at some points, but yeah, they would just pool the money, and they self-organized to do it without even a state government.
I ask everybody, if you don't think that private individuals could manage their roads better, you've never had a house or never had a neighborhood butt up next to an HOA. because that HOA, that blacktop, within 2 minutes of a snowstorm in Minnesota, that HOA right back down to the blacktop, always smooth, never a pothole. You know, and everybody whines, I hate HOAs. I'm like, give me HOAs every day. I would take an HOA over a city council all the time. all the time.
If those are the options, definitely.
Yeah.
So
okay, so what about my roads? We did the typical libertarian tizzy. We say tizzy in Minnesota, the Minnesota Libertarian movement. We got a little bit of tizzy going on with the roads.
Okay.
We'll get
For
that.
those of you who are not libertarians, the nature, which I don't know, I don't know if there are any listening right now. I sent the link to some friends. So for anybody who's uninitiated, the joke is, well, if we do libertarianism and we shrink the government, who's going to build the roads? So roads. That's
my roads. My
roads.
So we got that out of the way, and so now you were gonna segue into a little bit more about the issue with the American economy, central banking, the the idea of the petrodollar, the myth of the petrodollar, as you say. I don't think people understand how important the topic is, and I think the timing on this obviously is what it is, because I wrote the piece that I wrote just from my layman's understanding of the economy and what I understand of the petrodollar idea as a construct. Before you get into dismantling what the common idea of what the petrodollar is, why is it so important right now for people to understand the concept of the petrodollar as it's forwarded or advanced into society today? Because everybody does, rightly or whatever, believe like the only reason the dollar has any value is because everybody trades oil in the American dollar. And why is that so important as we look at the not even oil futures, but like the actual physical spot price of oil right now is higher than even the future price? When most people look at the price of crude oil per barrel right now, they're looking at futures. When you look at the spot price of oil right now,
insane.
It's insane.
$140 or something.
Oh yeah, the last I checked, it was skyrocketing. Well past 140. And that's all very important to understanding the petrodollar and why it impacts our economy the way it does. So
okay, well, that's definitely a good starting point. Let's start with why are we having this conversation in the first place? Why we're having this conversation?
Crazy enough to say yes.
And you were crazy enough to invite me. But the reason we're having this conversation in the first place is because in February 2022, Russia invaded Ukraine. And when Russia invaded Ukraine, the U.S. said, you can't do that. And Europe said, you can't do that. So they froze about $600 billion of foreign exchange reserves that the Russians had in euros and dollars. Now, when you do that, part of the deal of everybody in the world saying that, yes, we like to use dollars, is that they believe, whether it's a government, whether it's a large corporation that's based in China, India, somewhere, right? They believe that they're going to be able to access those dollars whenever they want, okay? So if you create a situation where you have doubts that some of those folks are going to be able to access their dollars, then it may incentivize the people who currently hold the dollars to look elsewhere to do other things. All right. And then that's when, so that happened in February 2022. By March, you start to have articles coming out. The biggest one was in the Wall Street Journal. I think it was March 20. I don't know. Maybe March 14th. I'm trying to get better at memorizing dates, but I'll look it up later.
Right. You're the economic historian here, buddy.
Yeah, why don't you know the actual date?
Why don't you know?
What are you doing? Yeah, so an article in the Wall Street Journal came out, said a spate of recent deals with Saudi Arabia for paying for oil, in different currencies threatens the future of the petrodollar or something like that. So basically, you've got China, countries like China and India coming to Saudi Arabia, and they're saying, hey, we've been importing your oil and gladly paying for it in dollars, but we would like to maybe do it in yuan, please, Saudi Arabia. And there seemed to be willingness on the Saudi side to do that, at least for a while. I would say that with hindsight, so that's basically a 4-year background of why, and that started the conversation of de-dollarization. So that's why we're talking about the petrodollar again. That's why we're talking about de-dollarization, and why you see all of these like Substack or on Twitter or wherever. The Tucker Carlson podcast, right? One of the biggest podcasts in right-wing media. I think there was a recent Tucker Carlson podcast interview that literally had the words petrodollar plastered on the cover. So that's why we're talking about this. And the conversation kind of took a little bit of a backseat for a while. The current thing changed to a bunch of different stuff, and there was October 7th. So now there's the latest installment of the Arab-Israeli wars. Okay, and then the U.S.
It's another one of the current things.
It's another one of the current things.
It's I support or don't support whatever.
Exactly. Yeah, I support current thing. Exactly. So now we're back here because why? Well, because the U.S. Made a surprise decision to start bombing Iran. Okay, so Iran controls.
Sarcasm duly noted, by the way.
Yeah. So Iran controls a geographical choke point through which I think it's like 20% of the world's energy 20% must transit. And so now we're having this conversation about the relationship between dollars and the energy trade again. Mm-hmm. So that's why we're here. It's not the first or the second time that these kinds of conversations have popped up in the last 50 years.
Well, no, I mean, Iran and Iraq were literally blowing up each other's ships. It was called the tanker war in the 80s. They were literally blowing up each other's crude oil tankers, and they were going after each other's oil fields.
Yeah, the Iran-Iraq war is arguably one of the worst things that's happened in the world since World War II. I mean, terrible. Yeah. I think a million people died.
I feel like somebody was involved in that.
Yes, yeah. There was another country, a much larger country than both of those countries that funded both sides.
I can't think of who it was. I can't. Just right, gone. Anyway, I don't. Yeah. Somebody might have
Yeah, there's a book on your shelf that mentions that a little bit. Yep, That's Enough Already by Scott Horton, which is a good book.
Mine are
Very,
signed.
very
My,
informative. Oh,
mine are,
really?
yeah.
Oh, good for you. Showing off.
Scott's. I met Scott. I got signed copies.
Cool. Yeah, that's cool. All right.
It's the closest I've ever come to crying when I met a guy.
Yeah.
Because I'm like, dude, you made me feel not insane.
Mm-hmm.
And then I got to know Scott a little bit. And now I know I'm insane.
Well,
but
insane with the best company. That's good.
So here we sit, right? I loved how you summed up that history of the last few years. Actually, is probably one of the tightest summations I've ever heard. We've got all of these current things going on, and now people are like hyper focused on this one particular current thing, and they think, oh wow, this is like, no, this has been going on for years, decades, folks. This is not just something that's coming out of the blue. It's the current inflation, at which you mentioned, via not tax rates, but interest rates, interest rates. Yeah. All of this has been going on for generations, for decades. But here we sit because now it's impacting people on a very personal level. Their groceries are getting more expensive. Their fuel, I mean, our prices just jumped. I mean, I live in Southeast Minnesota, folks. And overnight our prices went up to in my town of 2,700 people, my gas price per the cheapest level of gas you can buy went up to $4.11.
Yeah, probably the fastest price response of anything that anybody directly pays for is in gasoline, because it's just like you said, it's overnight. Yeah. Now, the reason that the idea of petrodollar is important is because a lot of people, especially in our kind of sub community here, in libertarian world, we're sharing that Wall Street Journal article that I mentioned earlier, and are sharing the latest reports that come out from Bloomberg or Wall Street Journal or whatever about these negotiations between the Saudis or other Gulf states and these other trading partners that maybe the U.S. isn't so friendly with. And this to basically all libertarians, I would argue, because I think the petrodollar is part of their framework for how they look at the world, mostly. That spells doom for the currency. If you believe in the petrodollar system, which I think this is a good point to explain just what we're talking about when I say that. So a petrodollar per se is just a dollar that has been used to buy oil from Saudi Arabia, Kuwait, Qatar, one of the Gulf states, right? So that's what a petrodollar is. Sure.
You mean it's not the United States threatening them with violence if they don't use the American dollar?
Well, I'm getting to that. That. Yeah. Okay. So petrodollars themselves, if you want to embark on the project of defining certain dollars based on what they were most recently spent on, okay, then I guess petrodollar is a perfectly good term. But there's all kinds of other stuff that dollars are widely spent on. There's also wheat, there's also corn, there's soybeans, there's soybean oil, right? So you could say petro soybeans if you wanted to, or not petro soybeans, but soybean dollars, right?
We could just say, instead of soy boy, we could just say soy dollar.
Soy dollar, yeah, right, exactly. So,
Which
whether you want to do that
what might actually be more accurate when you consider what a soy boy is. That might describe the American dollar a little better.
Yeah. So anyway, what is a petrodollar system? So the idea of the petrodollar system is that the U.S. pays for Saudi Arabia in the other Gulf states. So people talk Saudi Arabia, but implicit in Saudi Arabia is what used to be called OAPEC, Organization of Arab Petroleum Exporting Countries. It used to be OAPEC, now it's just OPEC, because there's non-Arab countries that are members. And minus one recently, though, I think it was Kuwait who stepped out. I was going to say, do you think that's a sign of some things to come with Kuwait stepping out, or? I'm still trying to kind of to parse out what exactly that means. But anyway, so the idea is that the U.S. pays the Gulf states to exclusively take dollars for their oil exports, and in exchange, what the U.S. provides is weapons, ammunition, and protection. So the U.S. And the conclusion that you draw from that is essentially the U.S. has to do whatever the Arab oil exporters want, otherwise the dollar will collapse. The logical conclusion of the petrodollar, and we'll get into the history of how people believe that came about shortly, I think. But the reason that it's important to understand why this exists or does not exist is because if you believe that this is where the dollar ultimately derives its value, and there's this idea that's basically, okay, the U.S. dollar used to be backed by gold, and then it floated for a few years, and then this petrodollar thing happened in the early 70s, and now the dollar is effectively backed by oil. So there's kind of tizzy, to use that term you used earlier, there's this kind of tizzy idea that, well, if the U.S. dollar isn't going to be backed by gold, then it's got to be backed by something. You can't have unbacked money.
Right.
So that thing that people talk about now is oil. And so
except
the logical
for Bitcoin, except cryptocurrency.
Right,
Cryptocurrency can be, that's fine, but everything.
Yeah. Some people would say that that's backed by energy to a certain extent as well. But anyway, so if that's your framework, then really U.S. foreign policy and how much the Gulf states like U.S. foreign policy holds the keys to the value of the United States dollar. It's really their choice whether or not the dollar remains the global reserve currency. And if they get pissed off enough, then they have the power to change that. That's the logical conclusion of that system existing, right? And so my contention is that, the usage of the U.S. dollar around the world depends on a lot more than whether or not Saudi Arabia likes what we do in the Middle East, so I dispute the fact that system exists. The reason I dispute the fact that system exists, which I think we'll get into, is I dispute the historical narrative, and I dispute the economics. So there's certain things I think that would have to be true if the historical narrative of the petrodollar system were correct, and those things are not true. So there's basically two angles from which I dispute that.
I like what you say there, because I think we are at a time philosophically, not just for libertarians, whether you're more of a paleo libertarian, Rothbardian, Mises, maybe you lean a little more Cato Institute type libertarian, or whatever the wide swath of libertarianism might be, or non-libertarians. We're in a realm in the history of the U.S. where for the first time, people are actually kind of stepping back, and they're asking some really hard questions about historical narratives, no matter what the topic might be. And whether it's, has the U.S. ever really won a war? That is after the American War for Independence, has the U.S. really ever actually won a war? People
where they did win the war, was the net result actually beneficial? Like, was it a good thing that the U.S. saved everybody in Europe in World War I?
Right.
Maybe that wasn't such an awesome thing.
Well, or World War, yeah. How did World War I start? What's the narrative there? Oh, it started because was the Lusitania really? Did we set that up? Did we set up Pearl Harbor? Whatever people are starting to ask these questions, and instead of being in a position, or anytime you ask a question these days, you go back even 10 years ago, if you asked a question about an approved narrative, historical narrative, the first thing that happened was, oh, you are a conspiracy theorist. Right. I bet you line your windows with tinfoil, and now everybody's out there going, give me more tinfoil, please. Because people are starting to ask questions, because we're kind of watching the historical narratives crumble in front of us. And this current excursion, to use the approved administration narrative, this excursion, like we're just out on a cruise, is that, well, this has been going on for 47 years. No, this has been going on since 1953. And why has it been going on since 1953? Because of oil.
Mm-hmm.
And so people are now asking these questions. And so I think you bring up a really good point about what is the approved historical narrative about the petrodollar. What's the accepted, what's the one that we're supposed to teach people and they're supposed to believe?
Mm-hmm.
What is okay for you to believe about the petrodollar as it regards the United States narrative on the petrodollar, and then dismantle that, if you would.
Okay. So there's actually, I would say that there's kind of two tracks here. So there's what I'm disputing is I would hate to say that this is a rare instance in which, well, no, actually, I don't agree with the mainstream narrative either. So, okay. So I need to dismantle the mainstream narrative and I need to dismantle the alternative media narrative, because
steel man the crap out of those for me.
Yeah, I'll try. So whenever you open up a textbook that's United States history of the 20th century or something, you're not going to find a section about how the petrodollar system came to be and this is what it means and blah, blah, blah. So this idea that I just laid out, where the U.S. compels the Gulf states to take the dollar for their oil and requires everybody else to pay for the dollar and their oil in exchange for certain foreign policy concessions, arming and protecting them. That's not what you're going to find in the mainstream narrative. There is a version, a sort of watered down version of it that I think is the mainstream view, because Bloomberg did a special on it a couple years ago. So I'll explain that. So the non-mainstream but also wrong view is what I just described. Okay, so the U.S. does foreign policy things in exchange for the Saudis demanding dollars for oil. Now, what does the mainstream believe? So, and I can send you this link, but yeah, I think it was 2024. Bloomberg ran a special on the initiation of what they call their version of the petrodollar story, which is that back in the 1970s, there was a Treasury Secretary named William Simon. He was actually a Lehman Brothers. No, not Lehman Brothers. One of the big investment houses. I think it was Salomon Brothers. So this guy's a banker, and an investment banker. His business is bonds, and he's the Secretary of the Treasury under Nixon. And he went to Riyadh in July of 1974. The deal that they describe, which happened in 1974, is that the Saudis would accept dollars for oil, but there's an implication that that's already what they were doing. So they're not really worried about the currency that the oil is going to be paid for. That's a given. Okay. Now, the William Simon and Saudi Arabia agreement that happens according to this narrative is they agree to take some of the dollars that they're getting in the oil trade. So, because imagine this scenario. It was estimated that in the decade of the 1970s, the Saudis, especially after 1973 when oil prices shot way up in a couple months, it was estimated that they were going to get $1 trillion in trade surpluses from the rest of the world, not just the U.S., the rest of the world.
That just trillion in trade surplus, $1 trillion.
Mm-hmm. Over a decade, but $1 trillion was a lot more money back then, right? I think estimates were like 800 billion to $1 trillion, and $1 trillion actually meant something back then, right? That was real.
the fact
now
that
you had means nothing.
Yeah, the fact that you had to say that now it's like, yeah, that's like a missile. That's like a missile.
Yeah. Well, now $1 trillion is 1/2 of 1 year of government deficit spending. So you can think about it that way. The Federal Reserve runs a $2 trillion deficit, so $1 trillion is 1/2 of 1 year. So anyway, so what they're doing is they know that the Saudis are sitting on this massive pile of cash, and what they try to do is, I've never seen a T-Rex be quite this
She calls me T-Rex because I go on rants when I'm doing
Oh,
my
okay,
own
okay.
chart.
Cool.
So,
Yeah. So William Simon works out a deal with the Saudis in Riyadh that basically says they're going to take some of their surpluses and buy U.S. government bonds. Okay, rather than what they otherwise would have done. So what this is conventionally called is petrodollar recycling. Now this is absolutely a real thing. There's data to back it up. There was an agreement, right, between William Simon and the Saudis. It's, in my view, a little bit overblown because the military protection and the armaments and the base building and all of this stuff started in the late 1940s. So construction on the first airfield that the United States built in Saudi Arabia began in 1946. It's either 46 or 48. The first shipment of tanks that we sent to Saudi Arabia was during the Eisenhower administration. The first mutual defense agreement was also during, I believe it was during the Eisenhower administration, but it was either like late Truman, it was either in the late 40s or early 50s.
well, and the irony of that is all of this stuff is happening, and I know you'll know this when I bring it up, but all of this is happening after the U.S. won World War II, which what I would argue. The Soviet Union,
the Soviet half of Europe.
So the Soviet Union actually won World War II.
Yeah,
like and I'm not taking away from. I'm a veteran, the 82nd Airborne, so I come from a very long line of historical combatants.
Yeah, it's absolutely nothing against the people who fought the war.
Nothing. No. But so you can't say this if you don't say that the U.S. won World War II, then you hate America and you hate the military. You're not.
Wait, you didn't want to rescue the people in the concentration camps
that we knew nothing about until
that we knew nothing about. Yeah. It's like, well, that wasn't why at the time. That's not how they sold the war either. So, like, and I promise you that if they had tried to sell the war to the American public in 1941, saying we're going to liberate the Jews, everybody would have said no. I mean,
that was not because we're proud of that, but that's just the reality.
It's just the reality of how it was.
It's the reality. Yeah. Lindbergh was arguing against World War II, and look at what they tried to accuse him of. And Lindbergh was not what they tried to make him out to be for opposing it. He was a libertarian, really. But when you look at, you have Eisenhower, who comes out of World War II as this massive heroic general, wins the presidency. All of this expansionism happens before the petrodollar. And what was his parting advice? And obviously he said a lot of things, but his parting advice to the American people, to we the people, not to the government, to the we the people, was be aware the military industrial complex is going to destroy this country. It will destroy. I'm paraphrasing.
They already existed.
Yeah, they already existed. The military industrial complex already existed. And here we sit with the military industrial complex and the petrodollar, and we still have the central reserve, and we still have income tax and all of these problems. So when you're sitting here talking about these bases going in well before the inception of the petrodollar, there's something for people to, how do we say these things now? We notice things.
Yeah, you got to notice that. Yes, exactly.
You have to notice.
Yeah, and none of this discussion is to say that the United States government, especially in its expansionist form that we know, and its desire to, and it's being used for, let's say, American oil companies to reap the benefits of oil drilling in the Middle East instead of. Well, you mentioned 1930. You mentioned 1953 earlier. Okay, so what was the conflict there? Well, the British owned oil operations in Iran, and then when they told the monarch, okay,
that was a very nice way of saying that they didn't. They took it. They just said, hey, by the way, oil ours, not yours anymore. We're we're Britain.
I think they gave them 15 cents of every dollar or whatever that is in pounds sterling. Or something.
15. Right, exactly. It was 15 cents on the dollar.
Yep. And then in 1953, in the lead up to that, the monarch of Iran, Mossadegh, he told everybody, he said, okay, we're going to take more of the revenue from this oil because I think it's Iranian oil. Imagine that. And then the U.S.
dirty bastard.
You dirty bastards. And then the U.S. basically sicked the CIA on him. The CIA, which was formed as the Office of as the something intelligence service. I think it was the OSS.
They were operating out of Iran.
Yeah, and so they created an operation to overthrow the democratically elected leader of Iran. That's right. He wasn't a monarch. He was. I think he was democratically elected. Mossadegh. I have to go back and check that detail.
The Shah was.
The Shah was a king.
Yeah, he was. He was a king. That's it. And a titular king at the end. I know my audience. Some of my audience is hearing me say titular, and they're focusing on one part of that right now. That he was just kind of this titular head, and Mossadegh was literally leading the country as a prime minister or president would, and saying, "No, I'm going to make Iran great again." That's what he said. That's what he said.
Yep.
Can't have that. Can't have that.
Yeah, and it's not that a nationalized industry is not exactly a free market principle or whatever, but neither is having the government of another nation
control
make sure that its home corporations get to be the ones getting most of the profits from another country's oil exports. That's insane.
It's almost like it's almost like Chevron going to Venezuela and drilling their oil, and then Venezuela,
and then getting a bailout when they get bitch slapped by the Venezuelan government.
Yes. But that's our oil. No, we're Venezuela, and that's our oil. No, it's ours, and we will depose you if you don't let us have it.
Yeah.
So
yeah, there was I still fondly remember this meme. It was like the U.S. is whatever it is, like 10% of the world's population or something, which is not even, it's even lower than that. Like, let's say 5% of the world's population, but consumes 75% of its energy. And the response was, "That's unbelievable. Somebody's stealing 25% of our energy."
you saw somebody made that. That is,
yeah.
You have to find that, and you have to send it
years ago, but it was great. Or maybe it was like 25% of the world's energy. No, the numbers were even better. Yeah, it was the U.S. uses 25% of the world's energy, and the response is unbelievable. Somebody's stealing 75% of our energy. But so yeah, and I think that's basically how our government have tried to get better at saying we, right? Because I don't have a part in those decisions. I just fund it by force. But yeah, so that's kind of how we operate. There's that "we" term again. That's how our government operates.
Well, it's been drilled into us, whether it's our football team or it's funny. It's funny when your football team is winning. It's like, man, we won that game, and then when they lost, man, I can't believe they lost.
Mm-hmm. Yeah, that's funny. Yeah. Yep. Yeah, I never thought about it that way, actually. Yeah. That's interesting. Yeah, so, and the reason that I bring that up, the military relationship between the U.S. and Saudi is that, okay, well, part of that idea of protection for, let's call it monetary benefits, because what the mainstream narrative and what the counter mainstream narrative have in common is that the U.S. is operating foreign policy at the behest of the Saudis so that they can keep some kind of monetary benefit. The non-mainstream version of that story is so that they'll use dollars in the first place, okay? And the mainstream version is so they'll take the dollars and they'll buy U.S. government bonds with that. They'll help the government fund its debt. So, and the reason I take issue with that is because what are they exchanging? It's, you know, military protection. That's how the U.S. is compelling them to do that. But the military protection was already there for 30 years at that point. Right. So if you go back and read the articles, everything that was written about William Simon's agreement at the time, what they were doing was enhanced cooperation. So, and I do believe some of that is military, but it was an enhancement of an existing relationship in exchange for some, by the way, some of the oil revenue going into government bonds. So the other part of this story is that the U.S. wasn't the only country that got a deal like that. So at the same time, you had emissaries from France going to Riyadh. You had emissaries from Germany going to Riyadh. All these countries in Europe were going to Riyadh, and they were trying to get their own little piece of the oil revenues. That's what was really going on at the time. And so that's where the mainstream narrative and the counter mainstream narrative basically fall apart, because the significance of the Saudis here is the exclusivity. They'll only deal with the United States. All of their money gets, or a huge chunk of it, right, gets recycled into U.S. government bonds. Without them buying the bonds, the U.S. wouldn't be able to get funded, all this stuff, okay? And it's simply not that way. So all of these Western industrialized powers at the time got some slice of that cake, okay? And that's just, like, it's all public information. All of the meetings, you know, they were reported on at the time, and the results were reported on. Germany wanted investment in such and such manufacturing corporations, right? They got their slice of the petrodollars. So that was the foreign policy initiative at the time. Everybody in the Western world was trying to get a slice of the accumulating petrodollars. All right, to the extent that you want to define, again, if you want to define dollars as based on what they were last spent on, then go ahead, call it petrodollars. That's fine. But yeah, so that is the Steelman version of, and I apologize, you asked me to Steelman it, but I kind of took it down at the same time. But that's the full.
That's the best thing about Steelmanning. You're doing it to take it down.
Yeah, and I think so. The timeline basically goes, if we pivot back to the counter mainstream narrative, timeline is basically, you know, 1971, Nixon goes off the gold standard. It's always said, and nothing against, like, I'm gonna bring in Dave Smith's name here because he's gone through this explanation on his show, and he takes this as part of his, like, framework for how the world economy works. But everybody who I've seen write about this, including even the Atlantic Council, they didn't provide any sources. They basically say the U.S. dollar was thrown into doubt after 1971 when Nixon went off the gold standard. So there's an idea that was a problem, especially for the Gulf states, right? So they were threatening to no longer take dollars for their oil, and they started demanding gold. They started demanding other fiat currencies, and so that's why the U.S. had to come hat in hand, quote unquote. I've heard it explained that way, to the Saudis and offer basically anything they could to restore that relationship.
I just want to, in this sounds condescending, and it's not meant to be, but for those who don't know, when Jason or I or anybody else, when you hear them mention fiat currency, and that's part of the title of the show.
Oh yeah, we got to cover that.
Fiat currency is basically, you have the currency of your country. There's a difference between money and currency. Money is something of value. Currency is what, for lack of, to really make it simple, currency is just whatever your government says has value. Fiat currency is not backed by anything. It's just we determine what it's worth. And so if you go down to the grocery store and you're looking for spaghetti and the price is $5 for a 1 pound package, you just agree, yep, it's worth $5, but there's no tangible physical value to that outside of whatever that price is. You just agree to pay that. And that's far different than what it used to be, where you would walk into, use the term mercantile. You'd walk into the mercantile and the guy'd be like, you want how much wool? Oh, I'm going to need 2 silver pieces, whatever the currency is at the time, if you will. And you had the tangible silver in your hand. You had the valuable item in your hand to exchange for that. And so even when we went to a silver or gold backed monetary system, there was an expectation that you could kind of walk in and go, I've got a silver certificate and I expect you to give me silver in return for that to the bank. And they would have to produce it. And as we started to move away from that, you had to come up with all these ways of ensuring what it was, the FDIC that was created because of this, to ensure that if you had $500 in the bank had better be able to produce that $500. And that has shifted over time to now, like, I think what's the FDIC what's the bank have to insure now? Is it $750,000 in deposits? And after that, it's kind of like, whoops, it's on you.
I think it's 250.
Is it 250?
Yeah.
That's what we're. It might, yeah, right. At this point, you couldn't even go in. I bet you couldn't even walk into my local bank right now.
250. Yeah, I just checked.
Yeah, you walk in right now. I bet you'd have a hard time walking into your bank right now and telling them, I want my $250,000. If I had $250,000, I wouldn't be doing this show. I'll tell you
that. In cash, right?
If I could walk in and go get $250,000 right now from my bank, which I guarantee you couldn't. You couldn't. They'd be like, we need at least 24 hours notice. Let alone telling them you need that in gold or silver.
Mm-hmm.
And that's the difference, is that the cash value of something means nothing anymore because there's nothing backing it. Now, Jason may correct me here, which once again, I only bring people that are smarter than me on the show. So go ahead. Sorry. I wanted people to understand fiat.
Yeah, sure. Well, I would say that the main difference between fiat and commodity money is simply that fiat is untethered, where commodity money is tethered. And so the amount of supply that can be created in a currency system, or let's focus on the word money. So in a monetary system that has a gold, silver, a combination backing, there is an externally enforced limit on how much of that money can be created. And that doesn't mean that, so a lot of people, and it's not their fault. These dynamics just aren't explained when you go to school and you learn economics or when you learn history, right? So a lot of people think that
learn economics. That's
right.
That's better than my opening.
That's funny. A lot of people think. A lot of people are familiar with the fact that we used to be on a gold standard, on a silver standard, but will incorrectly infer from that every single dollar that existed in the system was redeemable for gold, or there was an amount of gold for every single dollar that circulated in the system. Right. And that's not necessarily true either. The difference is that banks and governments were limited on how much of the dollars they could create based on how much gold they had. Right. There was and as far as like what you would actually pay for things in the pre-fiat money era, people were very much accustomed to, even when there was gold and silver in the system, people became very much accustomed to paying each other with what I call bank or whatever, what in the field is called bank liabilities. Okay, so, and that's that's that word has a few syllables in it, but when you think about bank liability, okay, what is that? Your bank deposit, right? So if you have a bank account at USAA or JP Morgan Chase or whatever, or it would be Chase if it was a bank deposit, then that is a bank liability. What does liability mean? It's debt. And what do they owe you? So that's how to understand your relationship with your bank, right? What does the bank owe you? What is their liability? Okay, what they owe you is government notes. All right, if they that's what they owe you. That's why it's a liability, because if you want them, they need to pay you government notes, and there's a scarcity of those government notes. Even though there's 6 trillion of them or something floating around now, there's a lot more than there used to be relative to the amount of bank deposits, which is like, I think 20 trillion or something like that.
Which is ostensibly nothing more than an IOU.
It's an IOU, exactly. Yeah, it's an IOU. So we, as just regular participants in the economy making relatively small transactions, are going to pay each other for the most part in bank liabilities. Sometimes you'll take some cash out of the bank and you'll pay in government. You'll just use the government notes, right? And that's considered nowadays, that's at the top of the money hierarchy, is the government pieces of paper that you might get out of the ATM. Okay. But people in general over the last 2, even 300 years have become very much accustomed to paying each other with bank liabilities. So whenever you swipe a debit card, you're paying somebody with bank liabilities. So your deposit, which is a bank liability, gets sent to somebody else's bank, which becomes a bank liability. So there's no like actual U.S. government dollars and cents, at least from our perspective, in the process. Okay. That's actually been the case for quite a long time. So in the early United States, in the early colonies, there wasn't a whole lot of gold and silver in the system. Certainly not for regular people to be paying each other in gold and silver coinage. And in Britain, they started using banknotes so long ago, 1600s. Late 1600s, around when the Bank of England was founded, that people would just pay each other in the banknotes, and then the banks would worry about the gold. So what there's been over I would say the modern era of banking is a progression towards further and further and further centralized reserve. And that reserve, that thing that was owed, used to be gold, silver, or some combination. So the last time, to be specific about that, the last time that in America you personally as an individual could expect to redeem your bank liability in exchange for gold was basically 1932, before FDR banned gold. So that was the last time when it was really in the American psyche to go to the bank, say, I have $1,000 on deposit with you. I want $1,000 in some kind of gold. But even at that time, back in the Civil War, greenbacks became part of the reserve. Right. So greenbacks were considered just as valuable. So you could go to a bank and they could pay you in gold, but they could also pay you in greenbacks. So right. People had that. I mean, and that was, if you're in 1931, okay, that's 70, 80 years that people had been operating that way. That greenbacks, right. That pieces of paper issued by the government, which at that time at least were redeemable for gold.
And what a lot of people don't understand either is that the current Central Reserve that we have is actually the second attempt at a Federal Reserve. They had tried it. Yeah.
Yeah. Okay. There's the first bank Bank of the United States, second bank. Yep, exactly. But anyway, continue.
A lot of people have this really they misconstrued notion that like, oh, this didn't happen until the creature from Jekyll Island, which by the way, I don't know if you like it as much as I have, but it's
Oh, I do. Yeah,
it's a great read.
A lot of mainstream sources have redeemed The Creature from Jekyll Island in the years since it was published. Like if you read a story about where the Fed came from that's on the Fed's own blog, it reads exactly, very similar to the narrative in Jekyll Island.
It's funny. You know that they're trying to discredit something when they start to embrace it. It's like it. But it's a very interesting tell as far as, how this happened. But people go back to that. This where we are with this current iteration of the Central Reserve, or what we call the Federal Reserve, the central banking. And they're like, oh, well, this. I'm like, no, this has been going on. They have been doing this for centuries. They have been trying to do this for a very long time.
Yeah.
And a lot of people will point to places like Venezuela or Iran and say, hey, what's the correlation here? Neither one of those have a central bank. Oh, okay. Right. Fair. But correlation is not always causation. I don't necessarily believe that what happened in Venezuela and what happened in Iran are directly linked to try and force them to have a central bank.
Iran definitely has a central bank. They may not have had
it's one. It's Iranian, but
they may not have had one in 1953, but they definitely had one after that.
Brian, you're right. Jason is a very important voice that needs to be heard, and you need to find a platform that'll do that. Because
thank you, Brian. Yes. That's very kind of you to say.
Our mutual friend. Thank you, Brian.
Yep. Yes, the orchestrator of this conversation actually is
yes,
how
it's
I would
all
describe him.
He owes you a lot after this. I'll tell you that.
I owe him a lot. So anyway, so
I could make a joke and say, why can't he pull those strings with me and Tom Woods?
Yeah, I'm sure
that was terrible.
That's a much longer waiting list, I believe. So why was it fundamentally, I would say, why was it relatively easy for the U.S. to go off of the gold standard in 1971 and the monetary world not collapse entirely?
They were all doing it.
Well, another important piece of this is the last 50 years have been unique from the last 5,000 years. So for the 5,000 years that preceded 1971, all money was, except for periods, various periods here and there, like the Civil War or the early 19th century in Britain, when governments would make a decision to temporarily go off the gold standard, or the silver standard. Silver actually has a much longer history of being used as money than gold does. But at almost all times and places, there has been some kind of commodity backing to the money that human beings use, at least going back 5,000 years. And so this era that we're living in now, where we've basically taken the same system. So it's not as if in 1971 somebody hit a button and it's like, oh, okay, everything's different. We're on a fiat system now. It's just that they had, like, all of the rails that had been put in place over the 100 years prior remained. They just removed the actual reserve base, which was the gold at that time. And they replaced it.
Go ahead, finish.
Yeah. They replaced it. So fiat and what I think it's most important for them to understand is that fiat is what I think about as an infinite loop. Okay. So in the old days, somewhere at some point, there was a movement, or at least an understanding of commodities, maybe not physically moving, but I have this much gold, you have this much gold, or I have this much silver, you have this much silver. Large payments that took place in the system were also reflected in movements of that reserve, of that gold and silver reserve. So you and I can pay each other in bank liabilities, but at the end of the day, let's say that this is, let's just call it 1850, okay? You and I can pay each other in bank liabilities, and that's great. That's convenient for us, whatever. The banks, on the other hand, in the wholesale market for money, they're having to make sure that they settle up in gold or whatever their standard is, and usually
bank to bank,
silver, bank to bank. So
institution. Yep.
Exactly. And that's ultimately the anchor that keeps the money supply from, it expanded, right? It did expand M2, savings deposits, checking deposits, banknotes. The money definitely expanded, but there was a built-in feature of the system that would occasionally force it to contract, because if everybody for whatever reason decided that they didn't trust the banks right now, then they would go and try to redeem their money. They would try to get gold and silver in exchange. But if there was no gold and silver, the money supply just collapsed. Okay, so there was an anchor. And now what we have is there is no anchor. It's an infinite loop.
A perfect example of that is the Weimar Republic.
Of hyperinflation, yeah.
Yeah, the Weimar Republic. I mean, people are that we talk an awful lot about, the causes of World War II, and of course we always go back to him. You never know what's going to get you struck these days. You go back to him,
Schmidt.
and sure, he was a problem for sure. But he was actually more of a symptom that had come, for lack of better terminology, out of the collapse of the Weimar Republic and the debasing of their currency. And you see that play out over and over again. The question that I was going to ask as we're developing this thesis about, it's your position. When we look at where the U.S. finally said, "Oh, hey, by the way, you're not even allowed to own gold or silver anymore." How important is that in the history of the economic collapse to some degree of stability in the U.S.? Is that almost a non-starter in your eyes, or do you think that that's actually pivotal? Does that prove just how bad the economy was going to get? Was that a harbinger of things to come?
I think it was important because it helped get the tangible backing of money out of people's minds. So you have an era where you wouldn't even, like we were talking about before, prior to the Great Depression and during the Great Depression, you could go to the bank and you could redeem in a weight of gold if you wanted to. Greenbacks had been introduced, which kind of muddied everything up. But people still had a mindset that, okay, money is gold on some level. Like, we may use banknotes, we may write checks to each other, because at this point people are innovating, right? And it's inconvenient to use gold. Okay, so people are finding all of these different ways to pay, and they always have. Tobacco leaves in the Virginia colony right before the Revolution. There's all kinds of ways that people have used to get around moving gold and silver from place to place, because it's dangerous and it's expensive. But I think what 1934 did was it helped remove the idea of backed money from people's minds. And when you don't have a personal experience with it, right, you're not in the midst of a banking panic or whatever, people are not walking out with gold and silver, or you're never going to the bank to redeem your bank liabilities for gold. And as an investor, right, your bond is used to say payable in gold.
Right.
Payable in dollars, and the dollar, as we know, is 1/20th of an ounce of gold, roughly. So in the investment community, that means something. And so 1933, 1934 did a lot to remove that from the recent memory of the population. And that makes something like 1971 significantly easier to swallow for the population.
Yep.
So much so that a lot of people don't even know that 1971 happened.
Right. Well, yeah, so, I mean that's very fair. Do you think that was a calculated move on their part do you think that was meant to desensitize people? Or, I mean, there's two ways to look at it from a libertarian perspective, and both of them I think are probably correct. You have this they're desensitizing us. I don't know why that word did not want to come out the way I wanted it.
I think it did, yeah. I mean, generations of economists had, at that point, big state favoring economists had wanted to get rid of gold because it makes a lot more things possible for the state.
And that's the
So,
other
yeah.
part is, so you have the desensitization there finally of people, like now they don't even think about the dollar in relation to gold as far as my dollar can get me this much.
Mhm.
But it's also brought in and fostered a mentality of tyranny that the government could just come and take from you something that they say you can't have anymore. And I think people do not understand that. In 1934, they could just come to your house and take your gold if they thought you had gold. If they thought you had silver, they could just come and take it.
And a lot of people hid it in their yards.
Yeah, like these jokes you hear about people burying money in their backyard. They weren't burying dollar bills. They were burying gold and silver, tangible physical assets in their yards to try and keep the government from coming and taking them. And you could go to prison for having them.
Yeah, 10 years and a $10,000 fine or something like that. It was pretty
which was backed by nothing.
Right.
And so, like you said, 1971 rolls around, and most people don't even notice because they had been so desensitized to it that it was like,
yeah,
there's so much history to the petrodollar myth. So,
well, and the currency in general.
Yeah.
The other thing I would say about that is it's very similar to in COVID when they locked everybody down. That wasn't, to the general population, that wasn't an act of tyranny, which is crazy when you think about it. Like, to you and I, it was an act of tyranny. But when the states around the world did that, the general population had been so molded mentally by the crisis of that time that they didn't look at it as an infringement on them. They actually looked at it as salvation in a way.
You're taking care of us.
Yeah, exactly. You need to protect our health. The government, oh yes, the government is protecting my health. And in the Great Depression, that was the only time that a president could have done that, because they created a case whereby, well, things are really, really bad right now. They're the worst that anybody has experienced in your lifetime, people, and even the oldest people who were alive back then is probably, it was probably the worst economic period that they had experienced. And they convinced the population that, well, the people whose fault it is are the people who are hoarding money. If everybody would just redeposit their gold in the banks, then everything would go back to normal. Okay, so they do the same kind of dialectic thing where you've got people who are making moves to protect themselves, to operate in a way that's good for them and their families, right? Like not taking the shot, going outside, going to the park, going to the beach during COVID. So people who are getting gold because there's risk in the system, those are now the enemies. And they convinced enough of a swath of the population that, no, it's actually a good thing that we're taking your gold. That's how they did it. It's not as if they.
That's what it could be in the bank for you later to have.
Yeah,
we'll keep it all at Fort Knox.
Holiday.
I swear to God, it's all. I swear, it's all there. Don't audit us though. Don't.
So at that time, it wasn't only a seeding the ground for things that would permanently removing gold from the system, but they not only got people to be okay with it, they got people to beg for it, right? Which is what happened in COVID, which is what happens in every crisis. They get people to beg. You don't just accept the Patriot Act; you beg for the Patriot Act, because by God, if 9/11 ever happened, something like 9/11 ever happens again, you will have wished that you had been monitored every second of every day throughout your life. So it's a good example of that. So I'm glad that you brought up that question, actually, because it is exactly that game plan that governments use to increase their power.
At least what happened there. Once every conversation I have on this particular series, I ask one good question.
Well, you've had you had several so far.
What I hear an awful lot of in similarities to what we're talking about with the fiat nature of the U.S. dollar, and really, I mean, every every currency in the world. You probably know this, but I just trying to think of any country out there that has, and they all have their own currency for the most part. Well, no, there's the euro, but they're all really fiat these days. But I hear a lot of people going, that's why I'm getting out of the dollar and I'm going to cryptocurrency. And I'm like, yeah, bro, you're still dealing with fiat, because the only thing that gives crypto its tangible value is you can still go online. All they have to do to take your crypto away from you is shut down internet. It's done. It's done. It's not there anymore. You can't access your wallet. It's gone. But when you talk to people, it's so funny. They'll go, "Oh no, I'm in crypto," and I'm like, "Oh yeah, have you considered buying tangible gold and silver, or even copper? Copper? Have you gold, silver, or copper?" And they look at you and they think that's the craziest thing in the world. People to this day, they're still. Maybe you haven't experienced it, but in the world that I operate in, they're like, what are you talking? What? And like, I have no gold or and I also have no firearms. I have no firearms. I have no gold or silver. They were all lost in a tragic. In Minnesota, a tragic boating accident. Yes, for those of you that live in less lake-laden areas, it might have to be a strange desert thing. I don't know, but I have no gold, silver, or firearms or ammunition. Right. Yeah, quicksand. They're all gone. But when you talk to people and tell them like you should really think about buying gold or silver, they're like, "Why the hell would I do that?"
Yeah, it's a shiny rock. Who cares?
Like, because when the economy finally collapses, which, by the way, folks, if you're paying attention, the Great Depression was actually kind of not as bad as what we're on the cusp of right now. And if you walk in and everybody's showing up with a worthless dollar bill to try and buy a loaf of bread, and you walk in with tangible assets, you better have a firearm with you, by the way. But that silver is going to be worth a whole hell of a lot more. That that piece of copper is going to be worth a whole hell of a lot more than something that you got to carry in barrelfuls. Now, all that aside, cryptocurrency and whether or not it's valuable or worth what people think it is, and tangible paper dollar bills in that sense. Why is the petrodollar a myth? What has made the petrodollar, in your eyes, why, besides the mythology behind what it actually means, what is it about the petrodollar that is mythological? What makes the dollar so important to other countries, other than what people's false impression of what it means?
So the currency that people use for ever since there's been like a hegemon has been, it mostly has to do with, okay, what's the biggest trading economy in the world? So a lot of different countries around the world settled international trade in guilders at a time when the Dutch were extremely powerful, when they were the dominant trading partner and had the dominant I think they had the dominant navy for a while, but it was the Dutch East India Company that ruled the most important trade routes in the world.
Yeah, that was before. That's before they allowed everybody to smoke heroin in the streets and buy prostitutes from a window showroom.
Something like that, yeah. The Spanish had a lot of usage of their currency when they were first colonizing the Americas, and what really helped that situation is they took a crap load of silver out of the Potosi mine and they turned it into Spanish silver dollars. So it was really easy for that stuff to get around Europe.
And gold doubloons.
And which are very pretty. Anyway, not that I have any. That would be very expensive.
It was the first time anybody has ever said that about a coin in 5 years of the show. No one's ever said that's very pretty.
Oh, I mean, gold and silver coins are beautiful. I don't have any, but if I
did,
because I lost them in a quicksand accident,
Quicksand accident.
and a voting accident actually. But if I did, I would I would find them to be interesting historical artifacts. Yeah. So okay. So why do people use the U.S. dollar? Well, the U.S. Okay. For starters, after World War One, the U.S. began to accumulate, or during World War One, the U.S. began to accumulate massive amounts of gold from Europe, and there's a reason for that. There was a lot of gold in Europe, and it was not safe in Europe, so the rich people and the bankers and whoever else had gold in Europe moved it to the US because there's an ocean between Germany, because there's not only an ocean but also other European countries between Germany and the United States. So that was the
because
safest
Germany
place to put
bad.
it.
Just Germany bad. Just everybody remember Germany bad. That's
Yeah. So if you've got this terrible war going on that's engulfed all of Europe and you want to put your gold somewhere, the U.S. is a really, really, really good place to put it. Thank you. And I think I mentioned in our comment thread, like, thank you, geography.
right.
And then in World War II, so first of all, the U.S. stays on a gold standard, not internally, but externally they stay on a gold standard. And when and all of Britain is indebted to the U.S. I think it was like $10 billion in total, but basically Britain and France owe collectively, and a bunch of other countries, but Britain and France owe most of it. So they owe to the U.S. government $10 billion because of their assistance in World War I. And the U.S. is demanding that you pay us in gold or dollars. But the only way you're going to get the dollars is by having gold, because that's what the dollar is backed by. Okay, so in Europe and in Europe and in the Western Hemisphere, because those are our trading partners, the U.S. government is the biggest economy at that point in the Western Hemisphere. So everybody takes kindly to using dollars because everybody needs the dollars. And then another version of the same thing happens more or less again in World War II. So the U.S. ended up with about 75% of the world's monetary gold at the end of World War II.
And that's when they started to expand their physical footprint around the world, was right after that.
Well, we did do the Spanish American War to get like Puerto Rico and and a huge footprint in the Philippines and a bunch of islands and stuff. So I think the American Empire actually kind of got kicked off in 1890. And I would say Lincoln is to blame for sort of enabling it. For that's a whole different conversation.
Yeah, that's a different show, and that would take hours. But I'm here for it, but not now. But
not today. Okay, so the U.S. ends up with all of the monetary gold, so it has the reserve. European economies all went off of the gold standard during World War I. So look, all of the gold just whoosh, goes straight to the U.S. There's a giant sucking sound in the world wars and the interwar periods. Excuse me. And we end up with 75% of it at the end of World War II. So the U.S., okay, what is the situation? They have the gold, and they're the biggest economy in the world, and they're the only global manufacturing base that hasn't been completely reduced to rubble by World War II. Because at that point, the only manufacturing powers are all belligerents in World War II, and everything has been destroyed.
Right.
Okay, so that's just in terms of what currency people use. Now, I do want to state something, which is that like the idea of a reserve currency is very different now than it was 300 years ago when, say, the Dutch were in charge, because ultimately that the reserve that people talk about, the reserve that was important, and I'm doing air quotes if you're just listening, the reserve was ultimately, no matter what country was issuing the guilders or the francs or the pound sterling or whatever, the reserve was always gold and silver. Okay, so there's something unique about the situation we're in now. which I'll get to in a second. But it just wasn't the same back
Right.
then. So when a country had the reserve currency, that didn't mean that they could just borrow into oblivion, print a bunch of money and do whatever they wanted. Not to the same extent that the United States can, as in the situation we currently have. Okay, but you asked, the question is, why does everybody use dollars? Well, because that's how it always goes. So the biggest economy is the one that people want to sell to. They're the one whose currency ends up being used. Okay,
Which is why you're starting to see some countries start to lean towards the yuan.
Yeah, there's that, and also the dollar. If you look at Europe, for example, the euro is a really good example of this. So the usage of the dollar is not, in terms of cross-border trade, international trade and international investment, is not very high within Europe because they already have a cross-border currency.
Right.
Okay, so if you want to import from France to Ireland, or from Belgium to, I think, if you want to import from like Belgium to Germany or Spain or whatever, you don't need to do dollars first because they use the same money. Okay, so
they all use the euro. Yeah.
Yeah, exactly. So the US dollar is very popular in cross-border payments where there's not already some other kind of currency union. And right now the only other one that exists is the euro. But that's what it is. And that's enough. Okay. And that's where I think people get the petrodollar thing wrong, is that no, it can't possibly just be that it's the biggest economy and at one point it had all of the gold, which made it the safest country, or excuse me, the safest money in the universe. There's got to be something else, right? It can't just be that. But so there's this idea that if it's not backed by gold, it's got to be backed by something, and that something is oil. And I think that's why people believe it. But I'm, my contention is that, like, no, it actually is enough that the United States used to be, at the time that it was established in this role, was the biggest economy in the world,
Right.
has the biggest, baddest navy, the biggest, baddest military, and used to have all of the reserves. Still has a crap load of gold, by the way, whether it's individually owned by individual investors or owned by the government. US
Shout out
still
to
has a ton of
Monetary
gold.
Metals. If you're looking
Yeah.
for another show to sponsor, I would.
Right. Yeah, but the U.S. still has a crap load of gold in comparison to all the other countries in the world. So it's not
Right.
it's not as if that's why we went off the gold standard, to stop sending, because then we didn't have to send it anymore.
Well,
Anyway,
I don't think
so yeah, that's why.
I think a lot of people have they struggle with this, that a lot of people look at the debt clock. Thomas Massey is great for this because he invented that little debt clock thing that he wears
Yeah,
around.
the lapel debt clock.
The lapel debt clock. Only Thomas Massey, by the way, would go home and go, I'm going to make a computer that I can wear on my lapel. That's
Wear on
going
my
to I can wear on my suit. Everybody else is like looking for something fancy. He's got a homemade piece of technology, which, props to him. But what I don't think a lot of people understand when we think about the debt, we're passing this debt on to our kids, which is kind of a fair way to look at it. But what I don't think they understand is that our debt is actually the tangible asset that people are buying now.
Yes.
That's terrifying. Like that, for those of you who are not Austrian in your economic pursuit, you're free market capitalist, so you think you're a capitalist, but if you do not understand that the American debt is not just bad because your kids and grandkids and great grandkids are going to have to deal with it, it's bad because other countries are buying and investing against our debt. They're holding giant IOUs that they could cash in at any time. We're not just in debt. The only way for us to get out of that is bankruptcy. We could just go, sorry, we're not paying you. What are you going to do about it? And that sounds like a great way out of the problem for a country, but you try doing that in your own life, in the sense of see how much that impacts you. And so now you have countries, hostile countries. It's not like England's over there going, hey, we're your friends. We're going to buy your debt and help you out. Like China buys our debt. Russia buys our debt. And what you said, not anymore.
Yeah, they used to. Yeah,
Yeah.
they bought a lot of it, but Anyway, yeah, continue for sure.
Well,
Yeah, you've got
to me,
enemies who are funding your government.
Yeah, you have,
Effectively Cold
yeah,
War enemies, right?
yeah, and so it's a really it's a economically dangerous position for us to be in, because the only way out of it is to just say, hey, you can't touch us because we're militarily more powerful than you. In that respect, is the dollar weakening in reality against other in the world because of all the stuff that's going on, or is the dollar where it is and where it's always been, or are we in trouble?
Yeah. So this, I'm glad you asked the question in that way. And you mentioned that everybody else is reserving. You didn't use that language, but is reserving in our liability, in our IOUs, which is crazy. So, and that I promised that I would explain that, so I will do that as well. There's two ways of looking at the value of the dollar. So everybody that I talk to says, "Oh, the dollar's getting weaker. It's getting weaker," and that's true from your and my perspective because we don't deal in foreign exchange, right? So my version of the dollar getting weaker is it buys fewer and fewer goods and services as the years go on. So that's absolutely true. The dollar is always depreciating against goods and services. We haven't had a negative inflation rate since like one quarter in 2009. And then before that, the last negative inflation rate was probably in the 1950s and probably very briefly.
Just so people understand, when you say negative inflation rate, you mean?
So the inflation rate is the percentage rate at which, the prices of goods and services increase in, let's say, a given year. It's usually annualized. So a negative inflation rate means that overall the average basket of consumer goods, the price of it goes down.
No.
So there was one quarter in 2009 where that happened because, the bottom fell out of the economy and the Federal Reserve money printing hadn't quite kicked in yet. So we had deflation is the other way to say that.
Yeah, it's almost unheard of. Most people could never fathom that things aren't going to get more expensive, because they always do. They always get more expensive.
Yeah. But in the days that we were talking about before, in pre-Great Depression era, it was not uncommon for things to stay the same price, right, or to go down in price. In the 1920s, there was virtually no consumer price inflation on net in that whole decade. So there was a huge inflation in World War I, and then prices crashed in the Depression of 1920, and then they basically stayed flat for that whole decade, and then they crashed again in 1929.
Well, it's such an uncommon thing that, like, it's literally, you can go out and look it up now, and like even before AI and the internet, there were groups out there that would go, when in the year that you were born, a loaf of bread cost 75 cents.
Right. Yeah.
And now look at what, and that immediately may make people, when those printings would come out for people's birthdays, especially, they would go and I can't get a loaf of bread for less than $1.50 at my store now.
Mm-hmm.
And so people have been accustomed to everything. It's cyclical. Of course things go up, and then of course the very first thing that they do is a supply side economics argument of, supply and demand, more and more people want it, so of course it's going to get more expensive. Well, no, it's not. It's not like bread is actually getting more expensive. It's not. It's not harder for them to produce. In fact, they're more efficient at producing bread than they've ever been. Just look at all the fat people that are walking around, or not walking around your neighborhood, but
wheeling around.
Yeah, it's not that bread is more expensive to make. It's just they're able to charge more, and you're just willing to pay it because things get more expensive. That's just the way it is.
Yeah, exactly. And that is the way that it is now, because we have an infinitely expanding money supply, and there's no, like I said, there's no anchor for it. That's what makes fiat truly different. There's no anchor. But that's not how it necessarily needs to be. People just think that built-in inflation forever is a fundamental feature of capitalism. That's where we're at now. In a free market economy, you have built-in inflation forever, and everything just always gets more expensive. And people believe that because the monetary system that we've adopted and had for the last 50, 60 years guarantees it. So you asked about the state of the dollar in relation to other currencies. So the all-time so one way to look at that is the DXY. It's called, a lot of people will call it the Dixie, but it's the trade-weighted U.S. dollar index. And most of the components are the exchange rates of the dollar versus the euro, the dollars versus the Japanese yen. So there's not a whole lot of China or any of those other countries in here. But so it's basically the U.S. versus the industrialized world. The low value on the DXY, the lowest low since 1967, actually. Since 1967 was reached in the financial crisis. So in April 2008. And that was a low of 72.5, which just think about it of it as an index level. So 1967, it's 122. At the depths of the financial crisis, it's 72.5. And there's all kinds of, it wasn't a straight line between those 2 points in history. It actually went up. So in 1985 is the all-time high, and it reached 149, so almost 150. So it's fluctuated a lot. But right now where we're at, let's just take, I think a good starting point for our conversation would be where is it in relation to where it was in February of 2022. Right. And I base a lot of things I base a lot of my looking at statistics about quote unquote de-dollarization, because that's when this became a theme, essentially. So since February of 2022, the dollar started at about 97. In later 2022, when the Fed was raising rates at the fastest clip in history, it got all the way up to 112. Okay. Or 114, almost 115 at the high end. And now we sit at 98. So we've been fluctuating in the last few months between 98 and 99. So that's where it's at right now. If there is to be something like an actual dollar crash, a run on the dollar, prices are going to reflect that in real time. So before the U.S. went off the gold standard, and this is just universally true, before the U.S. went off the gold standard in August 1971, the price of gold on international markets had been creeping up for years. About 6 or 7 years went by from 1965. They started, like, the Federal Reserve itself would have to buy and sell currency futures to manage it because it was such a problem. Okay, so there were signals from market prices that were saying there's a problem here. And the same thing will be true with, the
dollar, yeah.
The same thing will be true if there's really a problem with the dollar. It's not just going to happen out of nowhere.
When you say that prices were creeping up, for the audience, because I think what's gold at per ounce right now is like $40 million an ounce or something. It's just ridiculous. It's just ridiculous.
Yeah.
It's just
divided
ridiculous.
By 1,000.
Yeah.
Or divided by 40,000. Yeah. $4,600 is where gold is in the ounce.
Yep. Yeah. Yep. You to get even to get an ounce of silver right now, I think the spot price is somewhere along $68 an ounce. Where you go back even 6 when you go back 5 or 6 years ago, spot price on an ounce of silver, you could have got it for $11 sometimes.
Yeah.
If you're paying it, if you were looking, I was never looking. These are just random things that I know. These are just random things.
Yeah. During COVID, not that I was looking either, but during COVID, I thought it was expensive at $30, at some points. Silver. And I thought gold was expensive at $2,000.
Right. You thought, it was great. You could buy an eighth of an ounce of gold and feel, now that eighth of an ounce is like I could sell that.
Yeah. It's $500. Yeah.
I could sell. But then you're like, nope,
and the
I
collector coins.
Oh yeah. But when you look at that, and you talk about how gold back, now, back then, as it's creeping up, and the Federal Reserve is trying to manage that, right before we go off the gold standard, what were people paying in that 5 to 6 year window as it's creeping up before 1971? What were they paying to own gold?
Well, the peg was $35 an ounce. And so what I mean by it was creeping up.
It's mind blowing.
Yeah.
But $35 back then was a whole hell of a lot more money than 35 is now.
In 1973, they raised the peg, even though we were off the gold standard. They were still telling people it was temporary. So they raised the official price from 35 to 42. And if you think about it, so since 1973, it's been half a century, and it's gone up literally 100 times. Which is over 100 times, which is crazy. So when I say price is rising, I mean in the London gold market, you would have, which at this point, individual Americans are still not allowed to own gold. That didn't happen until later in 1971, I think. But what that means is gold is selling for, instead of $35 within a tolerable range, it's like $35.50. $36.15, prices that are higher than $35, but it's not adhering to the peg like it had been before.
Right. And
so the Federal Reserve would do things to manage that. Like they would basically and the exchange rates weren't cooperating either, because during this era there was also there were also fixed exchange rates. So a dollar would buy X amount of British pound sterling. It would buy X amount of a Deutschmark. And those exchange rates were not cooperating either. The dollar was starting to depreciate. So what the Federal Reserve would do, and I've read this in their in their internal memoranda and stuff, they would buy currency futures. Or excuse me, they would short currency forward contracts. So they would just short Deutschmarks, right, to try to get the exchange rate back, to try and get the exchange rate for dollars back up. So they were trying to manipulate the markets that way to maintain the peg. And then once they couldn't do that anymore, it wasn't working, then that's when they finally closed the gold window. So
all of that to ask the question, which has been asked already, but is really how much danger is the U.S. economy in as it relates to the buying power of the dollar, and are we, with your analytical side, not just your historical side, but the analytical side, are we on the cusp of something really tragic, very devastating happening right now, do you think? And I'm not asking for a prediction in the sense of, oh yeah, this is definitely going to happen, but as you're watching this, whether it's this stupid blockading of a blockade, it's so much winning.
Yeah.
It's so much winning right now.
Yeah, I'm so tired.
I'm so tired of all the winning. As you watch all of this play out, and you're looking around, is our economy about to take a Great Depression style hit, only larger than it's ever seen, or are we just in this general rise and fall cycle, and we're just at the point of where we're kind of in a little bit of a dip and we're going to recover soon, or is there something big on the horizon?
I think what's about to happen is another global war. I think everybody, and I wrote about this in my last newsletter, but every European power is making moves to make it easier to get people into the armed forces in order to fight wars. The United States has just made it easier to get people into the armed forces to fight wars. Germany, for instance,
now you can enlist at 42.
Yeah, exactly.
42
so Germany, Well, and they made the draft automatic. So rather than what I had to do, which was fill out a draft registration card when I turned 18, or I think they made you do it at 17 or something. But now
You
it's
had to
just
have it done
automatic.
within
So
a
you're
few months of your
automatically
18th birthday or something.
yeah. Yeah, and I'm not sure if I hadn't done that, if anybody actually would have bothered me about it back then, because that was 2013,
Oh, shut up.
and I don't
Good.
think, well, I don't think it was a big concern at the time, but they
No,
made
I'm
it,
just saying shut
they
up
made it
because I
mandatory.
turned you turned 18 in 2013.
Well, believe me, there's plenty of scenarios in my life where I get to feel old. So
No, there's not. There is not, sir. There's
I
not when you
teach
turn.
kids Irish dancing. I mean, you know. Anyway, so yeah, how old? They'll say, "How old are you?" And I'll say 30, and they'll say, "Wow, that's so old." So it's fun. But anyway, so yeah, so you have all these countries around the world that are making moves to make it easier to get people into the armed forces to send them to war. So that's 100% happening. Russia.
Whoa, so that's
is-
like you're saying. So you're not saying that global war is 100% happening. You're saying it's 100% happening, that it's easier to get people into the military, and you're saying that's a foreshadow
Because-
of the potential global war.
because the people who because the people who are making those rules know that it's coming, and I would
Because
say
they
that
want
the
it to.
Biden, yes, yeah, for whatever reason, and I don't purport to like understand the the secret, the shadow government or whatever, or the deep state, like whatever
Right.
everybody's motivations are, why they do these evil things. I just know that they do these evil things, and that there is
Yes.
more going on than than laws are passed in a process that involves a lot more than I'm just a bill on Capitol Hill. Like that's not how it works.
There are so many people who have no idea what you're referring to right now. It's like,
Yeah, probably so. But anyway, so what is that gonna look like for the economy? Well, the U.S. has a couple of different ways with its debt problem to deal with that. One of them, which is the avenue that's probably going to be taken, is to inflate it away. But in order to inflate it away, they actually need to cut people's expectations about what they're currently demanding from the government. Because right now, the government can print a bunch of money, and they can, like they did in COVID in 2020, and they can spend a bunch of money, and they can bring about all this inflation. But we have a structural budget deficit because of Social Security and Medicare and the aging population. And so no matter how much you inflate, if you don't have something else happen at the end of that inflation or during that inflation, then nothing's going to change. You're just going to keep running, you're just going to keep on running up the credit card. So I would say, Venezuela, Russia invading Ukraine, talking about buying or invading Greenland, taking Canada, making it the 51st state. All of these things are moves in the same direction. Like, people are consolidating around the world. These different powers are consolidating their territories, and there's going to be a hot war.
I speak for all Americans when we are only interested in British Columbia, by the way. That's all so we do not we don't want the
And
Frenchies.
Alberta, right?
We do not want the Frenchies.
Yeah. So that's what I think is going on. Economically, the thing about the Great Depression was it was a deflationary depression, which is what depressions were back then, right? You would have this big expansion of credit, expansion of the money supply, and then the bubble would burst, and then prices would fall back to reality. And we don't do that anymore, right? That's not how it, works.
Yeah, whether it's the tech bubble or the housing bubble, it's like the bubble bursts and everything gets it goes like, what? Like, wait a minute, it's collapsing. Why is the price going up?
Yeah. Exactly. So you may get you get temporary corrections in the stock market and real estate, but overall it's not going to be a depression is going to be an inflationary depression. more
Right.
so than a
There's
deflationary
going to be a
depression.
lot more money out there, but it's going to cost you a whole hell of a lot more than they're printing.
Yeah. And that's not to say it could never happen again. I just think that the current generation of central planners believes that and this is not true, but they believe that the original sin of the Great Depression was that they didn't print enough money. So we have generations of economists that have come through the ranks over the years, and those economists are now advising the policymakers, and they are the policymakers and the central planners. And their founding myth of their profession, if you want to call, whatever you want to call it, is that, oh, the Great Depression happened because Britain and France and Germany and the US, they needed to print a bunch of money and they didn't. So that's why there was a Great Depression. And so when everybody believes that, okay, then they're probably not going to allow that type of scenario to replicate.
Right.
That doesn't mean it's impossible, but I just don't think it's.
They're all in. They are all in because ultimately they benefit no matter what. They all, and this is not an eat the rich thing for me. I'm like, I would love for all of us to be wealthy, although wealth is a
beginning of our conversation. Wealth is the goods and services that can be bought with your money.
Yeah,
right. Adam Smith.
Exactly. Yeah,
so I would love for all of us to be wealthy as well.
And there is a finite amount of there is not a finite amount of wealth, but there is a finite amount of people who are able to grasp what Adam Smith was teaching in Wealth of the Nations.
Yeah, small.
Yeah, very small. Is a global conflict the death of the dollar? And what's that do to the average American?
No, it's actually no. I would say the dollar is stronger after a global conflict because, look, the United States has a lot of problems right now. A lot of the manufacturing has been lower value manufacturing anyway has been outsourced overseas. So there's, whatever argument you want to make, we depend on external players to make things that we need in weapons, right? China and semiconductors we're heavily dependent on Taiwan for that and all these things, right? So there's not a whole lot of resiliency in the system. Is America, has it become a little bit decadent in the time that it's been the global hegemon? I mean, yeah, that's what happens. That's human nature. That's just what happens. But that doesn't mean that the United States isn't capable of telling people when crisis is in the mix, when it's like, okay, we got to go to war with these people now, which will be a false flag, like just like it was back then. There will be a need, air quotes, to go to war that's not really a need, right? Like Hitler was never going to invade America. He didn't even want to invade Britain. If you read Pat Buchanan's book,
Hitler was not sending troops across the channel.
Yeah,
he was having enough problems trying to control mainland Europe. The Japanese had no desire to invade mainland America. None. Yeah, they didn't really want anything to do with Hawaii, honestly.
And they were dumb for
taking the bait,
Pearl Harbor, but but the United States let it happen because an attack on the homeland was the only way that they could guarantee U.S. entry in the war.
An attack on the homeland.
Yeah, so whatever the instigating event is, it will be fake. It will be a false flag. Blah blah blah. But it'll change everybody's mind.
Wait a minute. Are you implying that our government wags the dog?
I'm implying that the government frequently lies to our faces because that's just what people do.
No, that's only some governments, not the current government.
Not our government.
The current
Russian government is a bunch of liars, but not our government. Our government.
Well, all our other governments maybe lied, but not the current government. The current government would never lie to us about anything.
Yep.
It's 45D chess, Jason. Come on, man. You got to get with the queue.
I'm behind the times. Yeah.
Got to get with the queue, sir. Get with the queue.
So yeah, I think, but where I was going with that is simply that once this crisis is introduced, right now the problem is why do we keep running up the government debt is because people do not want to accept less from the government. They've been getting these goodies, and and I'm sorry, but Social Security is more welfare that is a distribution from the young to the old than it is some kind of pension program that you paid for. That's just mathematically true, and nobody wants to make the hard decisions about who's going to get less. This crisis event, war, the build up to the war will change that, and the U.S. will be able to do the things it needs to do to not collapse into a debt spiral, like everybody's been talking about. It has to be a change. What I think it requires is the kind of change in popular thinking that can only be created by a huge crisis, false flag event, whatever you want to call it. But I think there's a mindset shift that would allow the U.S. to survive.
I'm kind of in the rapid fire question section now, because
Yeah, you good.
we've been at this for a while, and I'm sure you probably have.
Yeah, we've been here a while.
I do this series to do it long form. And then people are like, you got to have that guest back, and then they're like, have you seen? I had them on for 2 hours. They're never coming back. Do you foresee a place in the very near future in the American economy where people are starting to trade goods and services a little bit more freely, as opposed to relying solely on digital currency? We do not need to open the central bank digital currency door right now, where people go, hey, I got backyard chickens. Not me. I would never have backyard chickens against the policies of my city ever. Or own gold, silver, or ammunition. But do you foresee where people are maybe a little bit more openly showing up at the farmer's market and going, hey, I've got 18 zucchini for 5 loaves of your sourdough, and that starts to become a little bit more common, this barter type system where the economy is kind of like, things are tight right now, so let's see what we can work out? Or do you think that's done in our economic world in the US?
Well, paying each other in alternative modes was very common in the Great Depression, because there were no there literally were no banks. There was no money. Nobody had any actual money, so they would basically write script to each other. So in that situation, yes, if you're in the midst of a war that is happening because that's my base case, is pretty serious global conflict. If that, for whatever reason, is coincident with a banking collapse, then I think that's an obvious outcome. But I don't think that's. I think that the dollar simply gets a lot more devalued against goods and services, then I think that's the more probable outcome than the outcome of a banking collapse where you can't find any money to barter with. And look, as long as people have money, as long as people have access to some kind of money, then they're going to keep just using money, because the only thing that forces them to do otherwise is the unavailability of that convenience, and that's what the last at least 150 years have shown. So people only do that when they don't have alternative means.
So the parallel economy agorist in me is I'm out of luck.
Well, not necessarily. It's just, do you have a community around you that wants to intentionally engage in that kind of activity?
They better, or I'm going to come take it.
Yeah. What I'm talking about is the like mainstream of the population. When I say, they're only going to deal in barter or alternative modes if the convenience of the banking system is taken away, or if the convenience of some kind of stable coin or whatever is taken away. And since you mentioned CBDCs, I'll just say,
he's going to do it.
I'll just say that what that looks like, at least in America, is the mainstreaming of stable coins. And I think that there's a fight between multiple industries over that right now, because I think there's a level of that actually does threaten the private banks And so I think that there is not a planned fake conflict. I think there is actually a real conflict between interest groups happening over, substituting our current system where we pay each other in bank deposits versus some kind of stable coin or central bank digital currency alternative. I do think that that's a real fight, that the bankers at least would prefer to just keep the system we have now, which is already extremely non-private. You saw what happened to the J6ers getting their bank accounts released to the government when the government tightened the screws up enough on Bank of America and other ones. So
now, as I'm about to be deplatformed because we've mentioned all of the things that we're not allowed to talk about. If you were gonna, for the laity out there, if you were gonna give people some reading recommendations, of course, find your newsletter and your postings on Substack and whatnot, which the link is in the description. If you were gonna tell people, hey, here's some must reads from a layperson's perspective, and that's not to downplay the ability of people to grasp, but everybody has to start somewhere. Give me 2 of your best recommendations for a person who's like, hey, I heard some things that make me want to look into this more. Where would you send them?
I think for economics generally, if you just want to understand the economy better, I think the best one is Henry Hazlitt's Economics in One Lesson, because it's quick. Yeah.
I just happen to have one right here.
You can listen to so you can listen to Thomas Sowell's Basic Economics for free on YouTube and several other of his books. So if you like want to just listen to something progressively while you like drive to work or whatever you do, take walks or whatever, then I think that's a good option too. But yeah, so best intro is probably Economics in One Lesson. And then in the kind of topic that we're talking about specifically, Milton Friedman had a really good book in the 70s called Money Mischief. And he just goes through a bunch of historical episodes where the government has printed a crap load of money and it's led to the obvious consequences of money printing, which is inflation, and what they did to change that situation. And it goes all the way back to I think the American Revolution is the earliest example there. But that one is very accessible. It's not like a monetary history of the United States where it's a little bit harder to read and much longer. It's a short read and it's in very, it's in easily accessible language, and it's kind of entertaining at the same time. So,
you don't recommend that everybody start with Adam Smith's Wealth of Nations?
I haven't even read the entirety of Adam Smith's Wealth of Nations. Most people who call them, which I'm not even an economist, but most people who call themselves economists have not read Adam Smith's Wealth of Nations. I've read chapters here and there when I need to, and that's
it's dead. It is. It feels like this.
And I'm sorry to say, I'm maybe a third of the way through Human Action. I picked that one up and read a little bit more every now and again. But Murray Rothbard's History of Money and Banking in the United States was my first foray into in Austrian economics, actually, before I read anything that Mises wrote. I did read Mises's Theory of Money and Credit, which is illuminating. But the first book that I read in this space was Murray Rothbard's History of Money and Banking in the U.S., and that really took a lot of the scales off of my eyes because of the way that
Rothbard has a way of doing that.
Yeah, for sure. Yeah. And then if you want to read a lot, Creature from Jekyll Island, I think that's helpful as well.
Yeah.
But
good luck getting a copy of that right now, by the way.
Yeah, you'd have to read it digitally, I think. But yeah, but I think I would read Rothbard before, nothing against G. Edward Griffin, but I think I would read Rothbard's history before Jekyll Island, because it's a bigger picture.
Yeah, Jekyll Island, I've mentioned it to people who are like, why would I watch a horror movie? I'm like, well, you're not wrong, but it's not what you think it is. So couple of quick, and these are like kind of one-liners. Favorite, maybe you don't have time for this. Favorite movie with a even accidental libertarian message in it.
Movie.
Like,
Oh, Star Wars. Yeah.
He's like, oh, like Star Wars.
Yeah.
Okay.
Easy.
That just make people think about that for a while.
Yeah, the original trilogy.
Yeah.
Yeah. I would say that. I would say Star Wars. I think that the prequels, though, they kind of build a storyline that exhibits how a government uses a crisis and a war to fundamentally change
The heck you say?
to fundamentally change society. So, and I didn't really appreciate that when I was watching it as a kid, but that's definitely in there.
Fascinated with Jar Jar. We know it's okay.
Yeah, Jar Jar.
Jar Jar is the Sith, but anyway.
Yeah, he's the Dark Lord for sure.
He is the Dark Lord. Favorite. I don't get to ask this to everybody, so maybe there again, maybe you don't do this, but is there a particular series of like TV or streaming or whatever that has some libertarian principles or philosophies in it that even accidentally that you picked up on?
No, I think TV is engineered by the CIA.
Fair.
I watch it still because it's entertaining, but I think TV, when I go back and watch shows that I used to watch in like the aughts, like around Great Financial Crisis era, because there's a couple series that I watched with my family back then that have like nostalgic value. But when I go back and watch things now, I realize like, yeah, this is how certain people want you to think about the world.
Exactly. This is what they want you to think is actually going on. Yeah.
Yeah. But they show you that in a way that makes you feel as though you're coming upon uncommon knowledge, when it's just the bullshit that they want you to believe so that you'll behave the way that they want you to behave. But they'll introduce it in a way that it's like, oh, not everybody knows that,
Well, I had that experience recently. I kept hearing people rant and rave about how good the Night Agent was. I'm like, okay, fine. I'm going to try it. So I do my workout on the treadmill in the morning before work, and I'm like, I'm going to start. I'm like, why is the Secret Service and the FBI portrayed as these stalwarts of liberty and freedom, and it's just on this one guy to save the institution? I'm like no, this is crap. Like this is Operation Mockingbird in Hollywood. That's what we have, folks. But
yeah, I mean, I think the best testament to it is the best example is like they had to privately fund the Passion of the Christ. Christianity is the biggest faith in the world. It has a huge market in the United States. It would have instantly made hundreds of millions of dollars, and which it did,
right.
And Hollywood would not fund it.
Right?
It's like,
would not.
Why is that?
Well, that's because Mel Gibson's a radical.
Yeah, I get. Well, they had to I think it's around the time that the movie was created that they had to dismiss him as a radical. I think or they had to dismiss him as a crazy person, actually.
Which he is, but I mean,
and I think they called him a Nazi and like all.
He was the same playbook. He was a racist and all that. Which
he hated Jews. That was the thing. He hates Jews. Yeah.
So I really appreciate your time, and I know you're like, okay, this dude's asking me to come on. I don't know anything about him, but hey, go for it. It's like playing roulette. But
this has been fun.
You say that to all the random small podcasts that ask you to come
on. I did want to just leave. No, I don't. Sometimes it's not fun. I do want to leave your audience with a handful of statistics that they can. That I think would help them digest the importance of the change between commodity-backed money to fiat money. If you have maybe 2 more minutes.
Oh, absolutely.
Okay, so there's a data set at the Bank of England called a millennium of economic no, it's a millennium of macroeconomic history of the United Kingdom, I think is what it's called. So these economists, they got together and they constructed a consumer price index, which is how we measure inflation, how we estimate inflation. Not measure, because you can't measure something that's, anyway, I'm not going to get into that. So they made
You're
a
trying to
price
stay on
index
topic for your own points.
for my own thing. I know it's hard. But anyway, they put together a price index that goes all the way back to 1209 AD, right? And it is 1209 AD, not CE, people. If you say CE, I'm not listening to you anymore.
You're just not a serious person.
I think you're just not a serious person. You're yeah. Anyway, so 1209 AD, and it's fascinating when you look at this. Obviously, the data gets lower quality the further back you go, but there were prices, and people wrote down prices even as far back as 800 years. Okay, so it takes 300. So from the beginning, it takes 300 years for the index to permanently double. So that's 1209 to 1515. Okay, from 1515 to 1560, so that's 45 years. It doubles again because of the price revolution and the Great Debasement in England.
We went from 300 years for a double to 45 years for a double. I feel like I feel like this is going to get worse the longer you go.
Well, it's yeah, exactly. So you're noticing a theme. It takes 50 years after
I
that.
noticed things.
Yep. It takes 50 years after that to double again. So now we're in 1610. But after that doubling, it fluctuates, but doesn't actually achieve another doubling until 1800. So you've got a half century, but then it takes 2 more centuries, okay, because the world kind of stabilizes again. Not that the world is stable. There's the price revolution stopped. Okay, so then it takes
our world is a cluster B
years.
mess, a cluster B personality disorder mess.
So it takes another 200 years to double again. And then after 1800, it doesn't double again until midway through World War I. So that's another 100+ years. Okay. Now,
this is where it's going to go off rails, isn't it?
in the post-war era, in the post-World War II era,
Oh no.
the index starts at a level of 5. So say 1945, the price index level is 5. The index rises to 100, okay, in 70 years. It goes from 5 to 100, 20 times. All right. That's the effect of untethered, unanchored money. Price inflation used to happen, but it was extremely slow, and there were centuries where you didn't have any net price inflation. Okay, so putting that together, from 1209 to 1914, the average inflation rate was 0.8% per year. So less than 1% per year on average. And it took, I mean, again, for prices to rise like permanently to significantly, it took hundreds of years. Okay, so the average inflation rate, 0.8%. During the Great Debasement, which was the worst inflation that anybody had ever seen or even thought of at that time, it was 1 to 1.5%. So during the 1500s, when the Great Debasement happened, okay, what is do you know what the Federal Reserve's target inflation rate is right now?
I don't. You caught me out. Normally, I would have that off the top of my head because I've been paying attention to it, but I don't know what it is right now.
Okay, so if the Fed is doing a good job, to them a good job is 2% per year. During the Great Debasement, which was the great hyperinflation of its day, the rate was 1 to 1.5. And Federal Reserve,
the Fed's like, hey, we could just be a full half point higher than that, and we're doing wonderful.
Exactly, they consider 2 a good job. All right.
Yeah, what's it at right now then?
3.5 is like the latest, typical range.
Wow.
Okay, so from 1914, okay, so that's the pre-World War I era, 0.8% on average. That includes the Great Debasement, okay, in the 1600s. All right, from 1914 to 1970. So this is World War One to the end of Bretton Woods. This is World War One to the end of the gold standard. 3.9%. Okay, 4 times the annual inflation rate just in that era. All right, when countries have a mix of no gold standard and gold standard. Okay, from 1971 to the present day, 6.1.
No, you're depressed. You're depressing. You're depressing me. I'm like,
So, yeah.
I
So
need to go buy beer
0.8
now.
Yeah. Well, don't do that. From 0.8.
Don't buy beer. It's
Well,
expensive.
there's nothing wrong. There's nothing wrong with buying beer, I suppose. But yeah, so for 700 years, 0.8% per year. For 50 years ish, 3.9%, and then in the fiat era we have today, 6.1.
Wow.
A year. Yeah. So that's the
Holy-
impact of like I said, that's if you want to think about what is the impact of untethered money, that's it in a nutshell.
There you go, folks. That's why you are now paying well over $4 a gallon for gas. It's
Yeah.
not just taxes. That's because you live in a leftist state. I'm like, no, the average across the country, considering the states that are cheaper, is still over $4 a gallon for gas.
Yep.
Because of a conflict that's happening way over there somewhere. For most of you couldn't even find it on a map. And we don't get any oil from them
Nope.
at all. So, wow. Where can everybody find you, Jason?
Jason's Deli 1821 on X, which I don't do very much on X, but sometimes I, make jokes and post memes and stuff. I'm on Substack, purcellresearch.substack.com. Purcell would be the typical Irish way of pronouncing my last name, and then the Americanized way is Purcell. But yeah, when you say it the Irish way, it kind of rolls together a little bit better. So purcellresearch.substack.com. And what I do on Substack is actually, I'm not geopolitically focused. I like to include some notes about what's going on in the world in my newsletters. But my primary concern with this Substack is I run a momentum-based investment strategy. And so I'm sharing with my audience, should you decide to become a member, what it looks like to run a momentum-based investment strategy with mostly just stocks and ETFs. Sometimes I'll do options, but I haven't. It's very infrequent. So that's the primary focus of my Substack, is to show you what I'm doing with my own portfolio, which I started that portfolio a couple years ago in summer 2024. And so far from inception, it's up about 89%. So that's where we're at right now. So if you're interested in that, it's free right now. You get the newsletters
For
and
now.
everything.
Even free is going to get expensive pretty soon.
Yeah, sure. Yeah, as we have this conversation about inflation. And I don't have any plans or a timeline to change that. So if you want to take advantage of the free information, definitely do it. Yeah.
Well, I really appreciate literally all your time, and thanks for tolerating my libertarian jokes about Irish dancing.
Oh no, that was awesome. Like I said, that was the
I
best
will-
intro I've ever gotten. Loved it.
I will copy those. I had to make sure they were wrote down.
Yeah.
I could not have done that off the top of my head. I will copy those to you, and I'll put them over on Substack in a note and let you run with them and have fun with it.
Sounds good. Yeah, and I'm at J Purcell Irish Dance. No, excuse me. JP Irish Dance on YouTube is the channel where I don't put up a lot of videos, but if you want to see what that looks like, I've got a few videos on there. So,
Well, you go and enjoy. I don't know what time zone you're in, so you go enjoy whatever's left of your day.
same
And
one as you, I think.
Oh, are you?
Central Time. Yeah,
Oh, are you? You must be further south than me.
I'm in Texas.
Oh, yeah, you're in that part of Texas that's got the right time zone.
Mm-hmm.
Yeah, Texas is big, so I think it's got like its own time zones because it's Texas and it doesn't need us. So, but you have a good rest of your afternoon and evening,
Thank
and
you. You too.
I will close this out. I did all my
Thanks for having me
ancillary
on.
stuff at the beginning, so now I don't know how to close the show without rambling for a long time.
Oh,
so.
okay. Well, thanks for having me on. I really appreciate it.
Thanks for making yourself available. You have a good,
Sure.
good one, and we'll have to find another topic to talk about sometime.
Sounds perfect.
Thank you, sir. Folks, this is why I have people that are smarter than me on, because they can actually educate you. I can just rant and rave about corrupt government and bad cops and things like that, and that's my forte. And then every once in a while I write something over on Substack, so find me on Substack as well. I'm pretty easy to find. Just type in TC and MBRR Media and you will find me over there. And just to let you guys know, if you are interested in what I do, I could use the support. Things are getting tight here ever since it's been 6 years of doing this show. And 5 years ago on Friday, I was I came under attack from my employer. They were working. I was canceled, folks. I was canceled, and I lost, after the end of that fight, I lost 75% of my income because of this platform, literally because of my platform. And so if you're looking to, if you like what I do, all the content, or there are things you don't like, but you like some of it, or you like most of it, or you're confused by some of what I do, but you want to help and you want to support, I would really appreciate channel memberships. It helps, like I said, it helps keep the internet going and keeps the electricity on, and it helps with other things. So we're holding on here, but it's by the tips of our fingers. We are struggling, and I can honestly say it's got nothing to do with me going out and gambling all of it away. That's not who I am. But we are working hard to hold on to it here. And so if you guys want to support, become channel members, or you can become members over on Substack, anything like that would be great. I'm thinking about starting a Patreon. Although I have to find something for people on Patreon. I have to do like Patreon related, like only Patreon, supporters. And they told me I couldn't do feet pics. So nobody wants to see that at all. Big shout out to Brian O'Leary for connecting Jason and I. It was worth it. I absolutely love this conversation. It's probably one of the most in-depth conversations I've ever had with any. And I've had some in-depth. I've had geopolitics and empire on. I've had Monica Perez. I've had Scott Horton. I've had Dr. Rechtenwald, Spike Cohen. But this is probably the most in-depth conversation I've had with somebody in a very, very long time, and it was worth it. And I took a lot in. I am overwhelmed right now with the amount of information and data that he brought. I'm going to actually I never watch myself back. Honestly, I hate it. I'm going to have to watch this one back to take it all in, because sometimes you're doing things behind the scenes while your guest is talking. People are asking questions, or you're getting a message. Hey, what's going on here? Can you ask this question? And I'm like, I don't have time to manage this all. So I'm definitely going to go back and watch this one over again. And please go check out Jason's stuff, and then go find Brian over on Substack as well. He writes some amazing things, and he talks about sports. What a weirdo. But folks, thanks so much for what you do. I do want to encourage you to tune in tomorrow. We're doing the second part of the story on Jamie Lucas and his disappearance. Once again, the last people that saw Jamie Lucas alive on July 3rd of 2020 were the Cass County Sheriff's Office. One deputy in particular. No one has seen him since. And we're going to be talking about what they call a search for him live tomorrow at 4:30 p.m. So please, if you like that content, or you like what I do with that kind of content, you're going to not want to miss that one. And I'm going to be doing an accident reconstruction the video about Trooper Ryan Moser and how he paralyzed Blake Mosted last year on April 9th. I'm going to go down and I'm going to break. I mean, I did one yesterday that was meant to kind of point out the hypocrisy of the Minnesota State Patrol. But the next one that I'm doing on Blake is going to be very in-depth and very detailed, and we'll be doing that one live coming up very soon. So I really appreciate everybody being here, all the viewers. Appreciate the guests. Appreciate people getting us connected. All the super chats. Once again, a shout out to Natalie, my volunteer researcher, for all the stuff that she does. Channel members, thank you so much for what you do. And until next time, my friends, fight for your freedom. It is yours. Fight for your liberty. It belongs to you. And sic semper tyrannis.
We are going for liftoff in T-minus 30.
Stand by for further instructions, Minnesota Black Robe Regiment.
Secondary guidance systems engaged.
Minnesota Black Robe Regiment, it will be on my mark.
All systems are let go. All systems are let go.
Minnesota Black Robe Regiment, you are over the target. You are authorized to fire at will.